I'll give it a couple minutes here and do a sound check and then get into it. Running a little bit later than usual today, but still plenty of time to sort things out. All right, pretty straightforward here. We'll start with the historic time frame. Historic time frame. I'm actually going to put these VWAPs in front. I don't know why they don't go in front, um, but I wish they would. So let's see, where in the heck is it? Right there. Excuse me. God, every time I start talking. Um, okay, so we have consolidation up here about, I think, 6, 7, 8 days, all pretty close in range within like 9 points. So we're creating a rope up here. The potential is to reject those prices and retest this rope down here. So higher time frame, historic time frame, uh, the potential is to reject here and retest here or accept here and press higher. Uh, it is also the potential to rotate on both sides of that balance for a long time and never test that edge. So we're going to look for that. If we don't test that edge and we break above it and find buyers, then that's going to be a rally point for the next leg up in the higher time frame. So we're going to keep an eye on that from the historic time frame perspective. But for now, just kind of a footnote and something to think about as we go forward in time throughout the next couple of weeks. In the higher time frame, as opposed to the historic time frame, historic edge down here, the edge that we talked about on this chart, same edge being displayed on this chart down here. You can see the VWAPs, the consolidation starting to fan out. We don't really have any crosses here. The last cross is back on this edge. This is just showing the the trend up and the VWAPs sorting themselves out. Coming into the 10-day back check, that's the first check lower on this 1-day back rejection here. So I'm kind of excited about that. So higher time frame. We've been putting in a series of lower highs, so make note of that. A series of lower lows, make note of that. And then we have this interesting outside bar. So we have this price action here, and we have this engulfing bar. And I know it's not the whole day and yada yada yada, but it's a significant range of price, and the market went up, engulfed it on the downside and on the upside. So we have this outside bar. Okay, so when we have an engulfing pattern or an engulfing candle, the side that it breaks to is usually the side that it goes to. So if this is a 3, if this move here breaks to this side, that's the rally point. If it breaks to this side, it rallies to the upside. That's the theory. It's kind of like a head and shoulders pattern. Don't put a ton of stock in it, but it's something to keep in mind. Um, that we had this broad range day. Okay, so VWAP wise, I've deleted everything except for the relevant VWAP. So 1, 2, 3, and 4. The 5, 6, 7, and 8 are all buried in the middle here. They're really irrelevant. That's the 10-day back check there. Flat on that trade. Potential now to rotate back up. Um, the they're inside the most recent participants are the most relevant, so I've deleted them just for clarity's sake. From a higher time frame perspective, we pushed up, We rejected higher prices. We came back underneath this higher time frame upper edge, retested that edge here, and then sold down to the 1 day back, which is the intermediate time frame lower edge. When we lose that intermediate time frame lower edge, in my world, it is a bullish scenario. That's when I start shorting. I shorted the retest here down to here. I'm looking for a rotation back up for another reason to get short. If we break back above this, then it puts us into that developing sandbox. We'll talk about that on the next chart. Right now, from and I don't think I can turn these back on. Yeah, no, I can't. I want to save those because I spent a lot of time drawing them for the other chart. Um, okay, so the price checks, we're in what I call the higher time frame price ladder. We've fallen below the 1 day back, 0 day back here. That's full session. Those folks are selling it, and we've now rejected yesterday's VWAP, full session VWAP. That sets up a bearish scenario. So sellers below 1 day back put higher time frame price ladder checks on the board. We have the 10 day back here, the 11 day back here, the 12 day back here, and the 13 day back here. Just real quick, we had big consolidation at this 10 day back level. We retested that 10 day back level here, here, and again here. Found buyers but couldn't get it done to the upside. Now have sellers, and we're back to that 10 day back with a potential. We also tested the 11 day back here with a potential to retest the 11 day back. So if buyers aren't doing it here, we're going to look for them to do it here. If they can't do it here, we're going to look for them to range expand down to here. So downside checks today in the near term our 11-day back for a retest, range expansion to the 12-day back, and if we lose the 12-day back, that puts us on a beat down to this historic time frame edge. So we're going to keep that in mind carrying forward for the day. Okay, intraday price action here. Got the levels drawn out. It's pretty. You can see the sandboxes. I'm going to try and use these colors. Developing sandbox is the upper edge is the full session VWAP at 0 day back. The lower edge is uh, current price action, so we can extend this line down here uh, a little bit. The thing with these impulses is often the VWAPs get drawn back in, so what we really need to make that lower edge is a developing sandbox to the developing sandbox is the RTH open to anchor some volume down here. So I would say right now I would draw this sandbox. Oh, wrong color and wrong size. I would draw this sandbox to that consolidation right there and wait for the RTH open. So developing sandbox here, upper edge of developing sandbox now almost fully outside of the 1 day back, which would be extra bearish, but not really anything, just a footnote. Potential check at 10-day back here puts this on the table. If this falls, then a retest of this lower edge here where we could find additional sellers and move down to the 11-day back or a retest of 10. So going to keep all of that in mind. We want to trade short side. We want to trade upper edges. The upper edges that I'm interested in are the intermediate upper edge. I'm going to get a better color here so we can see it. The intermediate upper edge, the developing upper edge, and this higher time frame upper edge at 4 day back, so the yellow, which is aligned with this. The edges that I want to buy are the 1 day back to the 0 day back, which is at this point kind of close. So I don't know about that. But the 0 day back then to the 2, and the 2 to the 3, and the 3 to the 4, and then the breakout in the real squeeze starts at this intermediate upper edge at this 4-day back. So all the sellers baked into the upper edge begin to get squeezed out if we find willing buyers above here. So that's pretty much it for the higher time frame uh, context, the intermediate time frame context, and the developing day context. Uh, so from that, we'll talk about the scenarios that I have outlined here. Let me see if I can find my screenshot. All right, so here we go. Turn this off. All right, so we talked about the price check 10 days ago. We retested, the, or 10 days ago, we had a big consolidation, major consolidation, retested. Potential then is to come back and retest that level again, which we just did. So if we find additional sellers, then it's range expansion down to the 11-day back, which was the last test, and actually makes sense. This is a retest, but we've already blown through it, so this is just a part of the price ladder. We see the rotation coming off of it right now, but the real potential is to come back down to here, to the downside. So coming into the market, my neutral thesis is kind of at risk right now, but it doesn't mean that we won't climb back above the 1-day back and get back into the sandbox and then stay below the higher time frame upper edge at the intermediate sandbox, which is more relevant, uh, and stay inside. All right, well, I need to have a graphic for when my wife bombards into the room and starts yapping. So apologies for that. So neutral thesis, we get back above the 1-day, get back above and the 1-day and stay inside the between 1 and the higher time frame edge and refuse to go higher, refuse that breakout. Bullish thesis, we see early selling. Uh, we get a retest of we got the 9, we got the 10, so potential down to 11, and then range expansion to 12. Buyers at one of these level bring it back up, come back inside the 1-day back, back to the higher upper edge and then break out. So that would be similar to the neutral thesis with the breakout. And the bearish thesis, the one that looks the most appealing and the most tempting most days, is to go with the overnight trend and uh, think, oh, they're selling the market. They're selling the market. I want to get in that and sell it down, but not really be aware uh, that the market is probably going to try and get bought up. So we want to be patient for this bullish thesis. Uh, it could be a gap and go. That might be what we're on right now, but I'm going to look for the price checks. If these price checks happen in the ETH, I'll be looking long uh, right out of the gate. If they don't happen, I'm going to look for price to come down to them and then try and get back into a more neutral or bullish thesis. If we go up and find buyers before we check these levels and then fail to break out here, then I'll be looking long to come down and test these levels. So the key here is the direction of the market. If we go up and fail to take out the higher upper edge, then I'll look to either come neutral or extend range to the downside. And it's all going to kind of hinge on what the opening swing is, what it looks like, and whether we click those edges off or not. So we'll keep that in mind going forward. We have the day, excuse me, the day developing here, and we got some decent range in the market, so it should be a good trading day. That's all I got right now. I'll leave this stream, make some coffee, pet the cat, and then we'll get this party started. Any cues, any questions, any thoughts, cares, concerns? How was your night? Mine was terrible. I was up with the cat all night. It's starting to get cold here. He won't go into his freaking house that I built him. And so he just comes and sets the Ring doorbell off all night long. And I don't want him to miss out on coming into the house. Be cold all night. So that is hard. Okay, this guy and this guy. I need to get these things pumping over to my other chart. I don't know why they're not. They are now. So those are the downside checks. Okay, here we go. Now my locations are screwed up, but that's okay. They'll be easy enough to add. All right, easy peasy. Yeah, snacks will work, but he just this cat is so traumatized. You know, he's had a few different homes. He's been kind of all over the country, and he doesn't have a lot of trust in people. He's super independent, and he doesn't like crawling into tight spaces. So that makes it hard for him. Not that not that he can't, just that he he's been in the house. He just doesn't like to hang out in there. So we're working on it, and once it gets colder, um, he's gonna he's gonna definitely go in more willingly because it's pretty toasty in there. But we kind of want to get him trained before. I mean, it gets cold here. It gets like 10 below zero Fahrenheit in the winter. So we want to make sure he has a place to go because he spends a lot of time outside. And I don't want to sit. I don't want to sleep on the couch anymore. And like, I like to sleep when I put my head on the pillow. I like to sleep right through the night. So, uh, but he's a good kitten. He's just a wild child. Just a wild child, that one. We finally got a tracker um, for him just to find out his range. And this cat is just, he's got this crazy range. We live in this neighborhood, and it's pretty defined neighborhood. Just like surrounded by uh, like a bluff on one side and railroad tracks down at the bottom of the bluff, and a highway with like a big highway wall on the other side. And it's about, I don't know, 3 miles from the railroad tracks to the uh, to the highway, so it's a pretty good distance. And then the neighborhood is probably like 3 miles across the long way, maybe even more, maybe like 4 miles. But this cat, like that's his everything in between the frontage road and the railroad tracks is his stomping ground, and he's just like all over all night long. And so we got this tracker, and it's funny because they have like all the other cats in the neighborhood. They have like I don't know, a couple 100,000 cats around the world use this tracker. So there's like a competition to see who has the most minutes and miles of activity. And it's pretty competitive, just like my wife and I are like, okay, next up is Chucky Thomas or whatever cat is next on the hit parade. Do you see the short here, Ra? Just in the theme, the theme of, well, the the short here last night at the close, or no, the short here last night at the close, and then look at the perfection here, man. Like here, and then the rejection of the upper edge in the ETH, the failure here, the retest here, and now the range expansion back to that 10-day back check. That is freaking beautiful. Beautiful. So I took a short up here. I don't know which one I got it on, but I just took a short down to the 10. looks like I might have been able to hold it for longer because it kind of seems like we're on a trajectory right now, but I guess you gotta take them off when they come. Gotta get some smaller bars on here, I think. Got a $3 range on that size bar. That's not my favorito. I like that better. All right, I'm gonna go make some coffee. Oh, you took a long. Um, okay. I don't think it's a horrible trade. I just um, think about the price checks that should happen in the market. So right now, if you can see we're on a trajectory down. We've rejected this edge. We've fallen out of this developing edge, and we've fallen out of this intermediate time frame edge. So everything right now to me is saying down until we click either the retest or the range expansion. That's those are my two criteria. So I'm looking at the retest of this, or I'm sorry, the retest of this where we checked yesterday, or range expansion here. And then, like, technically everything below 1 day back is weak. So yes, we can take a long back to that, but like I would rather take the long on the acceptance of this edge, or the acceptance even of the 0 day back if that comes below one, for the squeeze up. So that's kind of how I would play that. Now I'm with you because I think a return to settlement makes sense most days, and that's my bread and butter trade, is to buy the weakness in the overnight to come back to settle. So like I'm totally with you, but in the context, like I don't really see, aside from like having an order sitting here and being willing to take that, on a resting order, I don't see any context down here that suggests we're done. I would actually look, so this is how I would play this. I would look for price to come up to here and then retest that lower edge. That would be my long entry on a pullback. So I'd look for, I would say that would be a potential reversal. And at that case, we might go up to 0 day back and never come back to this edge, and that's the risky run. So just an idea. I mean, obviously, there's a lot of ways to do it, but that's kind of my thinking around it. I was actually thinking that this is gonna break inside, um, but when it didn't break inside, I thought, well, okay, maybe it's going down. So had this broken inside, then I would have been looking to take a long back to this edge. And don't, like, you do whatever makes sense to you. I'm just telling you where I, like, how I dissect it. And if you don't want me to, because I know it can be distracting when you have a plan and somebody comes in and, like, you know changes, says something that's contrary to it. I mean, that was one of the reasons that I kind of left that trading room. is like I was often at odds with the other guy who has a lot of experience, right? And whose experience I really valued, but it was just contrary to what I knew, and it was very distracting to me. So I will absolutely try to hold back. But you know me well enough to know that that's not easy. Jeez. Jesus. All right, I'll be back in a minute. I'm going to grab some coffee. All right, back in the saddle, and it looks like we just have a little bit of selling happening here. We'll see if this consolidation at 10 puts this next level up here on for a retest. It really should. I mean, at the very least, I'd like to see here to the long side, I'd like to see a test of these ropes here and then a retest of the new edge as it develops. It often doesn't happen that way out of the open. Oh, we'll see. We'll see. You never know. But I think these pre-market sellers here are relevant um, because they're the fuel that are going to get us back to the sandbox, to the upper or the lower edge of the 1 day back here, and then beyond that into the upper edge of the developing, which is at these ropes here. Kind of my full session VWAP is a little hard to see. I'm going to turn that on. There it was buried beneath. It's still probably hard to see. Try and darken it up. I don't really want to make it bigger. All right, so that's that. And then of course we have the price checks up to, if we come into one, then that puts the price ladder, that higher time frame price ladder in place. So it'd be 1, 2, 3, 4, but more so than that higher time frame price ladder, I'm looking at the leaps from the intraday, and in this case the overnight activity here, here, the full sesh, here, and then here. And so even though the price ladder, the higher time frame price ladder, these are more suggestions, like from a thematic standpoint. In order to get through these, we have to get through the participants that sold this down, and those folks are buried inside of these ropes here. So thematically, above the 1 suggests the 2, but in that idea, it's above the 0 suggests this. And in that scenario, it gives us the 2. So I always value most recent price action first, and then the old leg second, because we really have to get through these folks to get into anyone else from a higher time frame. And what the heck is going on here? I must have some, oh, let's see. There we go. I don't even know. I mean, if I had to lay this out, that's what I would say right now. That this is part of the developing sandbox, but this is range extension off of it. I mean, typically I use the RTH as one edge and the 0 day back as another edge. And right now we don't have the RTH. So, and it doesn't really matter because it's all about the leaps, right? So if this buyers came in here, it would put this on, and the sellers from here are still busy taking it down. Amazing. Absolutely amazing. Huh. All right, so price ladder wise, what do we have going on here, right? So we had selling in the overnight session. We had a retest of the 1 day back from overnight sellers. Buyers came in, brought it up to the intermediate upper edge, and then sold the intermediate upper edge back to the 1 day back where we failed out, broke beneath it, retested it from below, and now we're on a full send down. Click the 10-day back in the higher time frame price ladder. We're in a different sandbox now. The intermediate sandbox is everything from yesterday's sandbox, and that is at this intermediate upper edge here, and I might have ran out of VWAPs. Nope. Everything at this intermediate upper edge down to the intermediate lower edge, which is the 1 day back today. When we fall out of this, it puts us into outside of the intermediate sandbox and into that higher time frame sandbox. And the higher time frame sandbox is a price ladder inside of inside of this historic sandbox. So the historic sandbox upper edge is here in the higher time frame price ladder are these VWAPs from previous days back to this rope. So if we're failing out of the upper edge that's being printed up here, and there's about 8 days of VWAPs above us right now, maybe more. Well, actually there's 10, but there's 8 that are roped up above that created a bundle like this, and they're above us. So we're currently rejecting those prices. It opens the door to coming back and retesting this edge here. So we can't hold this edge. It sets up a return to here. The VWAPs anchored on each of these days are the price levels that make up the higher time frame price ladder down to this rope here. And so all I'm looking at is when we fall out of 1, if we can't hold 9, it sets up 10. If we can't hold 10, it sets up 11. If buyers come in at 10, it's a return to 9. And so think of like Mario, and Luigi climbing around in a video game. they go up, they go down, they go up, they go down, and that's what's happening in this price ladder. So these are just rungs on a ladder. If you can't hold one, then we go to the next. And so, I don't know who came into the channel, if anyone, but uh, the the volume here is a significant transaction that took place at the 9-day back VWAP here. We range expanded down to it. We tested this 10-day back and we did it again, and then we range expanded down again. So now we have lower lows here. So we have lower highs and we have lower lows. And so the next lower low, or the next place below 10 is to retest this, which is going to look a lot like yesterday's low. From the algorithmic perspective, the 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 most efficient place to get liquidity below is here. So if this is the average position of all the people that were long from this location and their break even is right here, that's an efficient place to get stops. If it overruns it, it's no longer like looking for that efficiency. It's actually signaling to us that maybe we're coming down to the next check, because from an efficiency standpoint, this is where the most liquidity is. So if it didn't get enough here, then it's probably going to want to come to here. That's my thinking, and that's all theory, all complete conjecture. So not to be confused with like an understanding of the market in any way, shape, or form. Just like I think about like where that liquidity is available and why it would want to go there, and what it means if it blows through it. All right, here we go. We got the open here. So the 10-day back price check is a valid price check. It's a retest of the volume here. Absolutely can go north. I expect early buyers to come in and try and take this thing up. The test is going to be at the 0-day back here to see if we can break back inside of the intermediate sandbox. And if we can, that opens the door to higher prices. If sellers come in before that, then we've got a problem, Houston. And the liquidity is really all stacked up below. So the 11-day price level is probably the next downside check if we can't get above zero. Watching this edge here. If the edge falls, that sets up a potential check lower. So there's the low of day and the overnight low. Now what happens? Let's see, I don't have my stats up, so we're lower in range. Value area low is 58%. P close is 74% on P close. P low is 53%. So not super great stats on the downside. I don't know why. I look at these every day and I still have to like read them. I don't just know the stats for these. There's only like 10 of them. So next higher time frame price check is 62 and 3/4. If we get there, that's a retest of the check yesterday, and then we could see a rotation off of it. If we get below it, reject it, then it sets up the 12 to the upside. If this 10-day back is next, it sets up a return to potentially to the 0-day back, and then we'll go from there. Retest of this sets up a retest of that on the upside, or lower prices. See if sellers come in on this level here. This is developing day balance here. The developing participants are sorting out which way they're going to go. So potential to break. I'm looking for this thing to break high and then retest that edge for a long. I'd like to see a 0-day back and then a developing lower edge test. And then I'd think maybe long to break back into the 1-day. I'm leaning short right now. We're under the 0-day back. We're under the 1-day back. Um, so those are the areas I want to engage in to get short. Um, this could be the bottom of it all. This is a pretty solid retest of a lot of volume here that traded at that 10-day back. But the current trend is still down off of that overnight high yesterday. So potential to retrace up through it, and also potential to spit out the bottom here. I want to wait for this, and God willing this. So we have buyers above this micro balance here, below this micro balance here. The average short from here is baked into this rope here. If they double down, retest this edge, and this is all very micro, but this is how you learn to understand it in other time frames. So buyers here put a retest of this on, and then potential up to 76 and 3/4. So if I were short from up here and had a super bearish outlook, I would be stopped behind these ropes here. If I were short from here and had a super bearish outlook, I would be stopped behind these ropes from here. If I were short from here and I wouldn't necessarily, excuse me, be because of the location. Um, but if I were short from here, I would probably be stopped above here, and maybe even this swing. And Jesus, then you know, the next check is up here. So if you're short here, you better be right, or you're kind of fukade. Hi. Don't have those levels on either. I'm lacking. I'm slacking. Slacking. So just as an observation here, and this can all change, but we're currently rejecting this here. We retested it and we're currently rejecting it. And now back underneath here. So this gave us this, and this either gives us this or the swing. It took the swing, and then we came back to it, and this puts this, and it either puts this or it puts this on. And then from here, back to here, or the swing. So you can narrate these leaps from one rope to the next and just stay engaged in this market. Like if we come down to here, it puts the swing on and we have the higher time frame target down below. If we come down to here, come back to here, it puts this on or the swing, and just keep narrating, just keep grinding out that narration. As these ropes merge together, they become one, and then those ones put this on, and it just keeps you just keep narrating, stay with the market, keep telling the story of the market, and pretty soon you'll be able to see that like secondhand, and you'll learn to ignore all of this and all of this and focus on these edges here. Those are the ones that matter. All this shit in the middle is irrelevant stuff in the middle. I didn't even catch it, but the existing home sales were worse than expected. I can't imagine why. For the highest home prices ever, highest interest rates ever. Like, what exactly? How long do they think they can gaslight us with these bullshit numbers? So second verse, same as the first. Trying to push this low and not getting it done. So consolidation here, and we're going to either break up or we're going to break down out of this thing. And it's kind of a take your bets. You know, if you want to play this level here, it's a kind of pick a side and place your bets setup, because the reality is if we come to here, we can come back to here, and if we come to here, then we come up here and we explode out of this and squeeze out any uh, shorts that got in late in the game here, and then we can come up to here and full send south. That's a reality too. So watching this level now, new sellers here, put it down to here, and I know micro, 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 but learn to read it. Buyers above here, put a retest of here with the potential up to here. The retest of the leading edge with the potential up to the outside edge. New sellers, back to the middle in this chop. So there's no range, no range. Either you're short from somewhere else or uh, and I should say either I'm short from somewhere else or I have to be patient and wait for an outside edge. Just making that fatter. So now we had some consolidation underneath here, we had a consolidation above here, now we're back to above here. So if we break to the upside, the test is at 0. Above 0 suggests a retest of 1. Generically, everything below 1 is bullish, but there may be a point in time where the trade makes sense to go long back to 1 day back. So those are thematic ideas that you can kind of develop with time, but like underneath 1 day back is almost always going to be uh, a short biased setup to me. Um, Everything below 1 day back would be really counter trend, and you might be right, and you might have picked the bottom, and you know, but I think it's worth just waiting for the 1 day back, or at least waiting for the 0 and taking the 0 to 1 if you have range, and then the 1 to 2 and the 1 to 2 to 3 and the 3 to 4, because this is inherently weak. And you can absolutely take the developing to 0. That trade is relevant. I just think you're kind of fighting the current stream until we break out of that 0. I think I'm fighting that current stream. So nothing about this says long, nothing about this says short, aside from the fact that we're below 0, we're below 1. So that has me kind of leaning to the downside in continuation of the downtrend here from yesterday's high. Now all trends come to an end. The question is, where do they come to an end? They come to an end on the retest of 10, the retest of 11, the retest of 12, or the retest of all the way down here. That's the $1,000,000 question. But if you have levels to shoot for, you have a pretty good chance of getting aligned. And if you keep that narration alive in your head, um, you have a really good chance of being aligned at least long enough to get half of your position off and get to a point where you don't have any risk in the game. And that's always my goal. It's like where can I get that risk off? So I know a lot of people are shooting for P low here. I'm looking at the 11-day back as the next check. And that might include P low. That could very well include P low, but that was the price check in VWAP world. That's the place I expect the potential to return to, is the 11-day back. And sometimes the 11-day back bends up. If we have big buy in here, all these drag up, and then P close or P low isn't even a level. Like right now it's below the 11-day back by a tick, but not even a tick, 3/4 of a tick. But sometimes it might be three points or 4 points, and so when that happens and we don't click P low and we come down within like a couple points of it, that's market efficiency. That's the market saying, I don't need to go to P low because I just took out the average position from 11 days ago. So we'll see what happens. But this basing out here looks a little bit like we might have found a bottom. What I'm going to look for is that impulse up and then a retest of the edge before I swing to the long side. And that's going to look, I'll probably turn this off. Oh, those are still good. That's going to look something like, if I can find a drawing tool, that's going to look something like this. It's going to come back and it's either going to test these ropes here, be more interested in testing them. So it's going to come all the way up, get that full session VWAP, come down and catch that lower edge that gets built out, find buyers there, and then that would set up a return to 0 and the 1 and that rope and that upper edge as potentials. But I want to wait, I want to be patient and wait for this and this. Sometimes that's hard. But the move, if you wait for that, like this move here, a lot of times gives you this. And so that's worth waiting for that, so you're not down here buying this into the sellers that are coming for this. And so of course you can do whatever you want. You know, you could buy this level here because it's a higher low and be scaled out, have your first target and be looking for this. But that may never come because we're kind of in the middle of nowhere here. The lower price check is here. We're below this one. We're below developing VWAP. Like I don't really have any reason to think that this isn't just the next leg down in this leg here. So what changes the context for me? What changes the context for me is if buyers impulse this up, take out this, return to this, maybe even expand range on that. And sometimes it's not this. Sometimes there's no volume at that. That's just a line on the chart. Sometimes the volume's down here. Sometimes it's up here. But I want to see it take out that volume and then retest the edge and find new buyers. And then I say, okay, the light switch is flipped. Upside targets are retest, back to here, upper edge, breakout. All right, we do have some data coming out here. U.S. home sales coming out in, it's at 9 o'clock. I thought it was at 7:30. Uh, U.S. home sales coming out in 3 minutes. It could be a mover. I don't know. I don't know. I don't. I can't see them like people buying more houses right now. I also think the market has all the numbers baked in to the pie, and that it's at best going to accelerate what is already uh, in the works for the market. I'll make a suggestion to you. Um, in this trade that you took down here, I don't really see a rejection at 10-day back. I see some candles wicking up above it, but to me, the rejection would come when this VWAP here came above this VWAP here. That would be a rejection. And so all we have here is range exploration and return to balance. Range exploration, return to balance. Range exploration, return to balance. And same thing on the downside. Range X, return to balance. Range X, return to balance. Range X, return to balance. This is still below the 10. So I would say that we haven't really rejected uh, anything until we break down and this starts bending down. We haven't accepted anything until this breaks up and starts bending up. And so I'm going to look at that. Um, what is what is the current rope doing in relation to my higher time frame checkpoint? If this comes above here, then I'd say, okay, maybe we're done. But as long as it's below here and the market isn't actively trading, and it's only going to go up there like after all this volume trades, and then on the impulse, if the market goes up, it's going to pull those up, and that might be too late, but that's going to tell you what the sentiment of the RTH open is. Like if it starts bending up, then that's going to be telling a story. If sellers come in, expand range down here, then it's going to start dragging that down, and that's going to tell a story. So currently, we're just flat on that, on that, on all the balance here. We're just rotating around balance. This is getting ready to move one way or the other. And so this is the crapshoot play right here. There's no, I have no context other than being below here, being below here. So being below the 1 day back, being below the 0 day back here. And that has me leaning short, but all short biases come to an end and come back to a long bias at some point. For me, the long bias would start on a test of this, maybe some range expansion on that, and then that lower edge holding up and coming back inside the 1 day back. That would be the official long side bias for me. Official. So right now, I'm just looking at this and saying, okay, this might be a continuation of this right here, because I don't have anything to suggest that it isn't. So do you see the stop run we just had there? Like, that is telling me that longs were baked into the market, and we just had massive absorption on that push down. So either we have follow through. I mean, we have like I don't know, 1,000, 1,500 lots were absorbed there. Big stop run down. And now here's our retest of this, and we can rotate on both sides of that balance still. If the market was looking for liquidity, it just got a bunch. But the most efficient liquidity is down here at 63, because that's where the average person from back then, from 11 days ago, is baked into that level. And so if the market is truly in search of liquidity, this is where it's going to find it. And so that's the level I want to trade towards. And then look to see, do we come, look at how we came into this 10 days back. We violated 10 days back, traded at 10 days back. It got its liquidity, and now we're pushing down lower. So to me, it's saying, okay, the liquidity here wasn't enough. Where's the next level? Well, the next level is going to be the 11. And this market retail can take this thing all the way up to here before it comes down to dip that liquidity pool. So it's all a matter of like, what are your what are your chances of getting a scale to find out if you're right on your thesis? And that's what matters most to me, is like developing that thesis and then finding out if I'm right, or if I need to reassess my thoughts on it. So same scenario here. That level got bought up, retest of this edge, and now potential to come down to that 11-day back level. An 11-day back may fall and we could get P low. And let's look to see, do we have follow through below that level? And if we do, what does the market do with it? Does it just hit it and run? Is it coming back to 12? If we fall out of 13, because 12 is, let's see here, we'll talk a little higher time frame. The 12-day back is coming from here. This is actually a pretty solid level of support. The 12. So that's the scoop from this swing high. So 12 could very well be a location for this market to find some buyers. If it gets down below 11, I would target 12. And then I'd be really thinking, okay, 11. And then you can also see 11 is the drop anchor here, the launch anchor from here. So the swing low anchor. This is the over under that most retail people are anchoring. They're anchoring this and they're going to buy that level up or they're going to take their profits at that level. That's a big important level. So we're going to want to watch here what happens at the 11. And that got bought up yesterday. So what do? Do we come to 12? 12 is the next check. So if we get sellers below P low and fall out of 12, I would say fall out of 11. Think about what when I talk about like when the market reverses, what does the reversal look like? Well, reversal often comes back to that midpoint and expands range, gets above it, and then it reverses. The same kind of scenario as we have right here. That's why I'm using that 0 day back. I want to see an impulse up to it and then a retest to the edge. So the edge in this case is probably the the 1 day back. So we test that test this edge here and then we have a potential to retest higher before we sell lower. So P low, and we should see some retail folks activated here. But if we get below P low, that opens the door to the 12-day back, and we might have a significant rotation. Uh, we might have a significant rotation, but look at the sellers hitting it here. This is real weakness, okay? So the market dipped into that liquidity pool at 11 days back, hit it hard, and now is below 11 days back. This is the market saying, I didn't get enough liquidity yet. I might need to go lower to find the liquidity. And this market is distributing too. Like we are, look at the one time framing down. Look at the order of the VWAPs. This is, the market is already short. Like the algos got short up here. They accumulated a short position and now they're distributing that short position lower. I'm not seeing buying here. Like I'm just kind of putting together these contextual ideas. Like what would I do if I had 100,000 contracts that I needed to distribute somewhere? What would I do if I needed to accumulate, you know, 100,000 contracts? And that's what these central banks are doing. They're big transactions. These aren't insignificant. So we got a retest to the 11. And range expansion, the potential is to come up to 10 days back, which is above developing VWAP. So I'm trading the intraday ideas first, and that's going to happen on this chart. Oop, oop. I don't know what the next one is. I don't want all of them on. Jesus. Stop it. Too many buttons. That one and that one. Okay, that's our edge right there. That's our intermediate upper edge. So FOMO sellers, look at how wide these VWAPs are. These are FOMO sellers. Price check here, price check here, price check here, price check here. Sellers, RTH sellers hitting it hard here. They're about to get squeezed out if we go above that. If new sellers join in, it sets up this lower edge. Range expansion on the 11. Big stop run. Did it get the liquidity it needed to take this thing higher? Has it finished distributing its liquidity from this overnight selling? Those are the themes that I'm kind of working with to decide how long I want to hold a short for. Do I want to be out at this low of day? Do I want to eat a rotation higher? Where do I want to put my stop? Like what's the upside potential? All of those things are kind of going through my head when I see this. Now, this is a big this is a big poke down below 11 days. They got a lot of liquidity in here. Another uh, another 1,000 contracts absorbed on the bid. Could be done. It could be that they have more to distribute lower. I see the violation of this 11. Now we're back above it. If we lose this edge, it sets up the 12. If the edge holds, it sets up a return to here. This market does not turn long until 0-day backstill. So even if we get up to here, I want to see a retest of this edge. I want to see a violation of this and a retest of this edge. And that may mean if we come above here, we get the buyers that step in and they take it up to here. But this is really where my bias might change. I want to see that. I want to see all of this get taken out and then a retest of the edge. So I might not be short. You know, I'm not going to hold on to a short indefinitely, but I'm not going to get long either on that little ripple of a poke up. So I'm going to be patient here. The market is definitely in sell mode. We're below the 1-day back. Like, the question is, did we find the liquidity? I'll be back in a minute. I'll let this thing shake out. All right, just eyeing this up. Uh, gonna let this thing continue to play out and just shut up. Right now, these FOMO sellers are all okay. They're baked into this rope here. These ropes here. But all of the developing shorts start getting squeezed out right here. So if they double down, developing is safe. This is range expansion on the developing sandbox. The developing sandbox is actually between here and, oh, what the heck is that? I never had those before. Developing sandbox is between here and here. Ooh, the intermediate sandbox is really, really shrinking down. And you can see the result of that market moving down, how it drags the VWAPs down. Look at this lower edge was up here earlier. So now the intermediate sandbox is actually only from here to here at this edge here. Oh, I'm sorry. I drew the wrong one. It's from here to here. That's the intermediate sandbox. And we kind of have a gap down um, between the intermediate and the developing. These are generic levels, but the squeeze starts here, comes back into this, and really squeezes if we got above here. But as long as we have sellers below here, it sets up this, and sellers below here sets up a return to the swing, and then a test of that 12-day back. So this is not a long to me. Like, I don't care about that edge being supported. I need to see the change in structure, and that's going to begin with the retest here. And that just takes patience. Because sometimes you get it wrong and you're on the wrong side of things, and you're sitting idly, and you're not you're not like actively, making money. You're not really doing anything, and that can be frustrating. So the key is to understand price action and potentials. So if we had range here, we certainly could have shorted back to that edge. I think the real check is on the outside edge of this volume here. So 68, I see a potential to come back up to here and then come back to the edge. This is super aggressive selling on in line with the drop edge here and not the volume edge here. And depending on the range, we got 67 to 63, so only 4 points of range down to here. By the time you get in, it's probably like 2 points of range unless you're resting. And this isn't an area where I would put a resting order. So pretty tough interaction there. I noticed in one of the other rooms that I follow, everyone was long. Everyone was leaning long. I bet they're not anymore. Oh my god, they are still long. Are you shitting me? Up until 9:15. Unbelievable. Okay, well, we'll let everyone just do their own thing. We got liquidity down to the 12-day back at 55 and down to the 58.50. I'm going to turn my heat map on full bore. There's a stack of liquidity, 172 lots down at 5,800. I think 5820 is where we're headed if we see selling continue. And this thing can find the buyers it needs anywhere. You know, if we look at the heat map, the edge of liquidity is 58.50. So 12 days back might be the end of it. 12 days back is at 55. It might be, you know, we might have already reached the end of it. I have no idea. Watch the retest of this edge here. Buyers above here, put a retest of developing VWAP on. Sellers here, put a retest of the lower edge. No range, 3 points. So pretty significant volume traded in here. Buyers at this edge, sellers at this edge. Sellers winning the fight because we're below it. Watch this. This needs to fall. It sets up a return to the low of day and then potential down to that 12-day back click. And then we have liquidity all the way down to 58.50 where the 13-day back is below that. We are absolutely expanding range in this higher time frame price ladder and making our way down towards this. It could happen today. It could happen. This could melt all day long and make a total return to here, get bought up in full send to the north. I've seen it happen, but I'm going to swing these monkey bars one at a time from 11 to 12 and then 12 to 13 and then 13 to 14, and I'm going to keep working my way down to the 25 level. If we get there, great. If not, I'm just going to reload uh, where it makes sense or flip the boat around if that's what it comes to. So from a price checking standpoint, we tested this rope here. Range expansion on that is up to here. We tested this rope. Range expansion on this is back to here. So we have 1, 2, 3. If 1 fails, 2. If 2 fails, 3. If 2 sells, back to 1. If 1 sells, back to low of day. That's the narration. And then you pick a side and see what happens. I don't really feel like we're in a trend day at this point. I mean, it is kind of technically a trend day, but we I think the like a trend day is really going to start when we reject the range expansion level down here. So if we come to 12 and find buyers, then we're really then it's two VWAP levels down that we're clicking. That would kind of be trendy to me. Right now we're just clicking one, and the expectation is range expansion down to 12. If we were to go to 13 and then 14, now we have the makings of a trend day. And then I have to flip over here and say, okay, well, where's the fatty on this chart? 825. So that's my downside extended range target. And we've been talking about that for the last few days because we're building out this rope and we're seeing the lower highs and the lower lows on this chart. We don't necessarily, we aren't necessarily going to get a monster candle that's going to take it out. The potential exists, but that's not necessarily how the market works. Um, it may come in a series of days that just grind down and we have to take it in chunks. It'd be great to have a big down candle like this. We just come down to that level, take it out, and then flip around and buy it up. That'd be wonderful. But I don't think we get a big candle like this until we lose this edge, and then we might see a big candle down to here. So we got the 1, 2, 3, and the potential is 1, 2, 1, or 1, 2, 3. So the 2, 3 would, I think we could have a bigger candle. Right now we're just looking for buyers. You can see it's like, is this low enough? I don't know. Is this low enough? I don't know. Is this low enough? Working our way down this price ladder. So it's about reasonable expectations. What can I expect out of this market? How long do I dare hold on to a position? Is this an all-day sucker trade, or is this, you know, do we have an upside trade today? Impulsive buy up to the sellers in the test of this structure here. Potential back to here. If buyers continue, potential up to here. RTH participants get squeezed out here, back to developing VWAP participants up here. So if we get above developing, it sets up a return to 0-day back. Watch the stomp here. Sellers here, take it back to the lower edge, or try to. Buyers here, take it to the 0-day back. So the downside test is the scoop here, 63. Weakness if we find sellers below 62. Upside check is up to full session VWAP, and we have the FOMO sellers here, a little more committed sellers up here, so potential to run through the FOMO sellers and come into here. If the market needs liquidity or is done, it's going to run through these edges and use these buy stops to get out of their long positions from down here. Looking to see what happens here if we make it up to there. I think the potential is to see some selling at this edge. Back to here, and if we have buyers here, it opens the door to a return to this edge here. There's our buyers. So this sets up a return to 0. So if I'm looking for a long, this is the type of look I'm looking for right here, is an impulse up that takes this out, but I always hold in my back pocket weakness here to trade back to that lower edge with this as an interrupter. If we stop this and continue higher, it puts a test of 0-day back on. If we lose this, it puts a test on that edge. My preference would be that we come all the way up and run the 0-day back and reject it. I want to short the edge, not in the middle here. And I realize we just went through all the FOMO buyer or FOMO sellers and into some more heavy liquidity. I would prefer a clean check of that outside edge up here. So it's absolutely possible to be a participant in here. I just might be a little premature. I want to see this edge get taken out and then like real selling come in, like real weakness, absorption, like a lot of sellers absorbing price. If they need liquidity to take it lower, this is the low hanging fruit in the liquidity pool. So watch the stomp. We broke above. Now retest from above. Buyers here, reject sellers here. That could be an out for anyone still holding on to a short position. And then when we come up and take this swing out, the shorts really start getting pounded. Back up to here. So depending on where they're short from, guys short from yesterday are safe until we come above here. Guys short from today are safe until we come above here. Guys short from RTH are starting to get kicked in the teeth, and either their stop is, outside, or they're rocking no stop, or they're feeling some heat. 64.5, now the lower edge. That edge is migrating up, and this is another problem that we're going to run into when you're taking shorts, is if price doesn't make the move. Now the VWAPs are dragging up, and your target is a moving target. So instead of being a target down here, now it's a target up here. And that makes it a little more challenging. So you constantly have to measure, do you have room to scale? Do you have room to scale? Do you have room to scale? And what does weakness look like? So my preference would be to trade the edge back to here for a continuation, and then potentially buy this. If we test this, run these guys out, and come back to the lower edge, then I'd be thinking, okay, maybe we take a long back to a retest of this edge. And particularly if the developing and this micro edge come together and we test those three elements. So a rip up drags these ropes up into the developing. There's still a potential short back to that edge, but if there's buying at that edge, then it starts to look like, okay, retest here and then retest here to try and push the intermediate upper edge here and then get into this price ladder for a continuation higher. But the intermediate sandbox is really necking down. I mean, it's all the way down to, oops, it's all the way down to here now. So that's the intermediate. Here's our developing. This is range expansion on the developing. This would be range expansion up to the intermediate sandbox here, and then this is the breakout level. This is where things start to get interesting to the upside, is above that intermediate edge. And then this is the breakout for higher time frame continuation, historic time frame continuation. And it also poses the potential to sell that edge. And really any of these edges, but particularly the 1 day back and this edge have potential. So coming into that 0 day back area now, on the downside, we have a developing edge. Oh, down here. So 64 and a quarter, 65. Sellers at 0-day back, retest developing, retest this lower edge. Can't get below that, then maybe it sets up a buy opportunity to try and push this edge. So playing out these scenarios so that I'm ready when they come to fruition, if they come. So inside of all of this, we have the intraday price ladder where this rope suggests developing, developing suggests 0, 0 suggests 1, 1 suggests upper edge suggests 2, 2 suggests 3. To the downside, if we click 0, potential back to developing, potential to the lower edge, potential to fall out. The closer this edge gets to here, the merging of those two edges, and buyers then are at this micro edge and at the developing edge, it makes it a little tougher to get through. But if we get through, the fuel is pretty intense underneath there. So 0-day back is kind of the over-under to either go to 1 or to retest down to developing VWAP. So 67.5 where these longs are, and potentially down to 65. And if buyers come in and take it above 0, then it sets up a return to 1. And you can absolutely play both sides. I was expecting a deeper pullback here, but that we could be done to the downside. We got our retest of 11, and now we got a retest of 11. We did get range expansion down to 12. That's what I was looking for. But this could be the end of the road. We're above developing. If we get above here, it sets up a return to 1. Higher time frame wise, anything below 1 is bearish, but all trends come to an end, and we may have found the end of that one. So my next area of interest is either a short back to the edge or a long from the edge to try and test higher. So here is a day that I do like the IB trade. I like it because retail is activated, they're anticipating it, you have clear targets, you don't have any obstructions, there's not a big fat rope in the way. It's you come down, you put in the IB low, which is just an hour, the first hour of selling, and then retail takes over and pushes this thing up, and you have clear targets developing 0, 1, 2, 3, 4. Zero-day back sets up a return to 1. Sellers sets up a return to developing. So if we find buyers here, the next area I'm interested in is the 1-day back, which is the intermediate lower edge, and that would represent a return to yesterday's balance, with the intermediate upper edge right here. You can see that's coming from yesterday's high of day upper edge. Sellers hitting it at full session, sets up a return to the 68. If buyers step in, back to 0. If selling continues, back to developing and potentially to the lower edge, where we'll see if this thing falls out or finds buyers. We have this merging VWAP here. So buyers at this edge may be saying we've gone low enough. It's always nice to come back to that. So retest of 0 sets up a return to developing, target at the edge, potential downside punt, and a trade management opportunity. Same deal. If we break back inside this lower edge, it sets up developing. If we come above developing, it sets up the upper edge. Come up above the upper edge, it sets up a return to full. So we have trade management opportunities in all of this. We can have the most aggressive stop, slightly more loose, slightly more loose, and then completely loose, fast and loose. And that's all going to be uh, dependent on what our downside expectations are. If you only expect 2 points of downside, it's pretty hard to have a 6-point stop. It is for me anyway. So nice rejection here for a continuation lower. Potential is always to come back up to the upper edge. And if not this upper edge, then this edge, then this edge, then this edge. So edge to edge, edge to edge, edge to edge. My God. It's like the blind leading the blind out there in the world, my friend. It's like Stevie Wonder teaching driver's ed. Still building out the edge up here. The change in VWAPs, I have, I now have 300 VWAPs spaced 2 apart. I would actually do like 4,000 VWAPs spaced 2 apart and just have them toggled to buttons. Unfortunately, IRT will not accommodate me. So I've managed to put 300 on, and it makes it hard to see like this transition. So you can see this rope here. Boop, 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 boop. Really gets hard to see with the wider spacing, and extremely hard to see when you get the much wider spacing. But I just don't have a solution other than manually anchoring those VWAPs in. I guess when you scrunch it together this way, it makes it easier to see. But ideally, I would not have to do that. I want things the way I want them. Damn it. So the next downside click is 12 days back. We've got liquidity at 55 right in front of it. 12 days back is 54 and a half, and then we have liquidity down at 58 and a half. 300 and some contracts sitting down there. Uh, those are the things that I'm kind of aiming for. And then the 13-day back proper below that. If we lose the 12, I'm just gonna throw it out. Losing the 12 really is showing some serious weakness. And just looking back here, the 12-day back is coming from this swing here. Sorry, the 12 is the launch here. So losing the launch sets up the 13, but I actually think we could see some buyers at the launch. That might be the point where we rotate higher. So gonna kind of slow roll that idea. I think the 13-day back, if we lose the 13, because it's kind of in the middle of nowhere here, if we lose that, that really opens the door for a deeper pullback here. So I'll be kind of eyeing up that 13 hard. It's also a psych level at 58.50, so a pretty key strike price. But just from a trade management standpoint, because we didn't get short up here, we can't just hold for here, close our eyes. So rotations, potential rotate off of 12, and again at 13. Below 13, I think we could see accelerated downward price action. But I still feel like we could find buyers at 12 and be done with the downside for today. So that's kind of my key level is 12, I think. And to the upside, it's developing VWAP and 0 day. It's actually developing lower edge, developing VWAP, 0 day back. That's the developing sandbox right there from this edge to this edge. And if we come back inside of the developing sandbox, it puts the potential to come up to the upper edge. So developing sandbox is looking a little bit like this. Kind of a weak little line. It's looking a little bit like that. It's a rejection of that edge again. Lower edge getting beat down twice now. Ooh, not looking good to the long side. Not looking good at all. I really like these 8-bit candles. Starting to get some liquidity hitting the book below the 50 level now. So I'm going to look for a test of that 12-day back here, and the potential is to find buyers off of that 12-day back and retest um, the middle of I don't know, like the drop from above, I guess, from from all-time highs. So we can that can be the battleground, and that's on a very coarse level. If the sellers are active today, that may not be the case. Um, we are at the 12-day. I'm gonna tighten my stop up, but I'm gonna try and rock this thing lower. I want to see what happens at 12 days back. If we push down to 1250, I'll probably take it there. We That's the fattest liquidity on the map right now. There's 400 lots down there. I do want to give it the 12-day back. I think that's the most efficient level for the market to go to. Whether it gets there or not is entirely uh, another thing, but I think that's where it deserves to go. 12-day back check proper there, so I'm going to take that last poke up of the swing, and I'm just going to try and rock this thing lower and see if I can get to 50. And if that 50 falls, then I'm looking for a complete mean reversion. So we're going to see where this ends up. So I'm using delta, delta checks to hide behind on the way down here. So fat delta at 57, I'm sitting on top of that. And I'm just going to keep, every time we build out a fat delta sell node, I'm going to use that until we can't go anymore. I've already got 12 days back. So I'll just ride these delta sell checks down. Next delta check is going to be at 12-day back proper if we get a flush here. And then I'll have my entire trade to 12-day back covered and still have one running for more potential downside. Because I think below 12 days back, and we can really see this thing start to go to the wolves. The average position from every long in the market from that swing low is here. Now they can double down and try and take it up too. Okay, I'm taking that 12-day back now on top of that last poke up. That's my stop. I'm going to leave it here and see if we can get acceleration to the downside. I think that's the potential here. Taking out that swing anchor, we're starting to feed on the average long from the swing low. And so active continuous selling here is really going to put a damper in those longer term holders. Oh yeah, look at this. Look at this thing melt. Oh yeah. Liquidity is coming into the market. Downside on this, just going to take a peek here. Downside on this is it's somewhere down in here, 27, 25. And obviously potential to go wherever, but that's the mean of the mean reversion. The meat of the mean reversion, I meant to say. So delta check at 49 and 3/4, and then another one at 53. If buyers take it over 49 and 3/4, then it puts 53 as the next safe spot if there is such a thing. So 12 days back, locked in. I've got a 10-point rotation that I'm going to eat if it comes back on me, but um, that's kind of small potatoes because I got a pretty good chunk of this leg here. And I do anticipate some more downside potential. And it might go up before it goes down. There is that. So look at the 13-day back. 13-day back seeing a pop. Delta check at 50 and a quarter. If that falls, then 53. Some pretty heavy retail selling into that, and quite a bit of buy absorption as well, or seller absorption. If this consolidation breaks up, I'll be out on this. I'm giving it the delta check at 50 and a quarter. I want to see the sellers pound this thing down. Looking at this right here as a potential micro sell trigger. The upside is to 54 and a half, where the sellers came in and forced, but the real upside is all the way back to here, and I don't want to eat that rotation. I'll try and realign if that's the case. This is all FOMO selling in here. FOMO selling and long liquidation. Oh my god. If this thing sells off here, I'll be amazed. $51.5 is the next price check VWAP wise. 53 is the, and I'm air quoting, 53 is the safe spot delta wise. Don't know if there is a safe spot. And then 54 is the next upside. Price check, 12-day back. It's kind of unrealistic for me to expect it not to go up here, because that's the potential 13 to 12, and then 12 back to 13 or 12 back to 11. But I don't want to give back half the trade to find out I'm wrong either, so there is that. Want to see this lower edge fail here? So we tested the rope, and now I want to see this fail. Stop is right above here. So either this goes or it's done. Oh, shit. Either it goes or it's done for me. And if it goes, then I'll be looking for 39, 33, 27, and 25. And now we have liquidity in the book at 40. So that's the 39, 35, and that's the 33, and 29, that's the 25. So I truly believe that the VWAP levels are all, that's where the liquidity is stacking in front of. I believe, and I have no like proof that I can provide other than uh, experiential evidence in the form of screenshots and whatever. But uh, I think that's what's happening here. And so when I say things like it's the blind leading the blind out there, I just don't think people really understand like what's happening. And I could be deluding myself, you know. Like why would I understand, you know? I'm just some schmuck. But I actually think I do. Which makes me think of that movie with the dude, the math dude who like has the walls full of math problems. Because that's a little bit like it is in my world. Uh, So we have retail buy delta check at 50 and a half into resting sellers. If that falls, all of those people, there's 437 there. If those people are right, then we'll start squeezing out these late shorts. If they're wrong, they become the fuel underneath here. So there's fat delta right here, retail bought this level, 440. We need to see them get squeezed out. If we take out the swing low, boom, we'll see a pop down on those 400 lots. If they come above it, and they may very well, I'm flat. If they come above it, we'll see a liquidation of the shorts and have a potential then to come back up to this edge and look for a realignment there. Okay, I'm going to take a little break here. I'm flat on that trade. I hope that you got a piece of it too. Uh, I'll be back in a few minutes here and we'll reset. Son of a bitch. Well, it looks like we're not done here. So, uh, load up the cannon, looking for this 82 and a quarter, swinging from rung to rung. I'm kind of kicking myself in the teeth for exiting that, but I don't want to get back 10 points. Look away for a second, and poof, and it's gone. right, all right. Nothing's changed in the market. Nothing at all. Potential back to the fatties up here. The seller drop is right here. That's the drop from the edge. The outside edge of developing is here. Outside edge of full is here. We're clearly uh, in a downtrend, picking off levels. Potential to take out the weak hands up to 52. Continue down. Potential to come up to 55. Potential all the way up to 59, and then outside edge up to 63. Second verse, same as the first. Uh, Reversal in this market is probably going to, at the very least, take this out. I would look for a little more, potentially up to the zero, excuse me, and then uh, potential retest of that lower edge. So until that happens, my mind is on shorts, and even if we did come back to here or here, I would still be with my mind on shorts, at least until that edge failed, the lower edge failed to get violated. So I'm flat. I was flat at 1020. So right in here on the breakup. And I missed a nice rotation down, but I miss a lot of nice rotations, and I'm cool with that. Retest of this rope here. So if we want to get really micro and split some hairs, we had a test here, retest of that, puts a retest of the outside edge here. Those look like little jelly donuts. So we retested this rope here. We can look for a retest on that. Fail to retest it. Accepting lower prices. Retest it. Range expand to the upside. And still short context. So anything to the short side, I'm going to look for range back to the edge. That's the edge is it. If we don't violate the edge, then the I want to kind of make the trade worthwhile to the edge in case the edge doesn't fall, if that makes sense. Oh my God, absolutely no on the long, my friend. Absolutely not. Short biased on the day below 1 day back. And I just talked about it, but I'll recap it for you if you're still listening. Uh, the long bias will not even, won't even enter my mind until, oh, wrong tool, will not even enter my mind until we see an impulse that comes out and either takes out the drop VWAPs from here, which are these, the developing VWAP here, or the 0 day back, and then comes back and tests this edge that builds out. The long would be right here. So we got a long way to go before I even consider a long. I actually think that this is our final destination. I've been saying this for like 3 days now. We're price checking lower on these ropes. And I think this is just the market looking for buyers on its way down to here. And so I don't have a long in me. We're so far out of the stratosphere right now. So that's my thoughts. I am, yeah, I know. I was in there. I was in the T Lab today, and I just like they are doing things very differently than I do, and there's a lot of conflicting ideas in there. So I just went in there, just right now. Maybe you saw me in there. I went in there just to see what the sentiment was this morning, what people were saying, and I felt like the blind leading the blind was a good theme. It's just distracting in there. So that's my thoughts. And of course, I can be wrong like anyone, but and the market will reverse when it reverses. But that's what a reversal would look like to me. And even if we came all the way up, so this is the last kind of point in here, even if we came all the way up here and took this out, I would still short it back and try to take it down to this edge because this is the ultimate target. And it might not happen today, but you know where I'm at. You know, I want to take trades at edges, and this is the edge of today. This is the edge of RTH. This is the drop from here. Those are the edges that I would look to get aligned with. But the further back, the better. So if I can get it here, that gives me some pretty good range to this edge back here. So I can get my scale and at least have a worthwhile trade and then the potential to continue in this theme here. So I definitely don't have shorts on my mind or longs on my mind in this market, but I'm beating a different drum. What are you up to today? Do you short, long? Obviously you shorted down to here. ETH, LVN. Oh, okay. Yeah, good stuff. Short was the way today. I took a short last night, uh, but it was essentially a scalp. It was this one right here. I shorted the rejection of this higher time frame upper edge, but just back to 1 day back. And then I shorted this morning, the retest and rejection of the intermediate lower edge. I shorted this, but just down to the 10-day back check here, and then uh, I can't remember where I shorted again. I shorted something else in here too. I think I shorted this structure here back to the 11, and then I shorted the 0 day back down to, I just got out at 1020, wherever that was. So I shorted down to 51. So like here, and now I'm just looking to see what we do on this rotation up. But I did get a pretty good throat punch today. I took a long somewhere. I'll take that back. Um, That wasn't. It was a paper cut, but I did take one loss. Yeah, I didn't see any longs in here, and I saw some folks like talking about longs, and I didn't see. I didn't really see that as a potential. So stocked out this position here. We had the retest. Oh, give me a tool. Had the retest of that rope right there. This was the next retest. So this sets up a return to here. If that falls, sets up a return to here. If that falls, sets up a return to here. And if this falls, continuation lower on a trajectory to here. And if none of that comes to fruition, there's the next upside. So I'm just narrating these out as they go. The place I want to get engaged is up here, and preferably up here, because this impulse can easily come up to here. So I would be more inclined to use these as trade management and these as entries. I'm sure it's conflicting with some of the the trades that you take, but you should come around more. There's good stuff to be had. So 58.50 is the downside price check. If we don't check it and we take out the swing, we come to here. If we check it and find buyers, we come to here. If we get underneath it, potential for the swing. Yeah, I mean, whatever works. That's what's important. And I know it's distracting. We were talking about that today. Just having somebody have a different idea that they're talking about, kind of like calls into question. And then you start thinking, well, this guy's been doing this for a long time. And we're actually talking about Tom and like how Tom has his way of looking at the market. And I've kind of developed my own. And Tom and I spent some time, you know, in a room, and he would be like narrating trades that were like completely counter to what I was thinking. And I was like, I just kind of got to the point where I was like, I can't do this, like this guy's fucking killing me with these crazy ideas. So I get it, man. It's distracting. And you only need one thing that works. So if you got something that works, just rock it. So fail to check so far. Trade fails here. And next upside click up here. So currently on a long trajectory here, counter trend, very much counter trend at this point. I've got no reason to think that this thing's going to the moon from here. All the weight in the market is down. This would be a falling knife being caught. And congrats if you were able to do that. If this falls, significant selling resistance here, but also significant fuel here. So the average position in here begins to get liquidated on this big fatty. So lower edge, like clockwork, and now the potential is to either fall out, catch a ride, take the top out and return to here. And the reason that I don't want to take trades like this is because this is the potential to here and then to take you out. And it's fine. Like, you can't win if you don't play, but I would prefer the trade come up and check here where we have 59 to 50. So we got 9 points to that lower edge before the trade has the potential to really fail and kick you in the teeth. And I've done a really freaking good job today of like not trading a lot. I've only traded 35 lots, and that includes 4 lots from last night. Potential up to 58 if we take this swing. and then 61. Merging ropes on the lower edge here. Oh, look at that. The IBL lines up with these ropes here. So we should have retail sellers supporting the move lower off of this level. Maybe. We'll look. edge falling, so sellers coming in front right at this at the drops and in front of this, testing that lower edge, and now the lower edge falling here. So potential downside continuation if we stay below 50, uh, potential up to 53, and still downside continuation above 53 puts the swing in a return here. But this looks incredibly weak. I wish I would have taken 10 instead of 2. But what do you do? Uh, 39, 33, 27 on the downside. So the default sandbox for the generic sandbox for the developing day is often created by the full session VWAP and the developing session VWAP. And in today's price action, it goes from the full session down to this lower edge here. That's what I would define as the developing sandbox. And the reason that I would define it as that is because that's where the most relevant volume is. Uh, the volume that traded here, from here to here, is what I would consider at this point in the day. I would consider this range expansion. You can see the difference, and this is FOMO-y. This is a pig pile of sellers, and those sellers might be right, but the potential is to go back and squeeze out those weak sellers, take their buy stops and convert them into shorts and take this thing down. And so if let's say that this is the bottom here and buyers step in, what's going to happen is all of this volume here and here and here is going to merge into a single rope, and as price goes up, it's going to drag those ropes and they're going to combine in with these. And that's going to be, then we're not going to have any VWAPs below here. The VWAPs will be merged into this edge here. That's why I consider this the sandbox and not this. Excuse me. And so that range expansion is filled with weak hand buyers or sellers at this point, and the potential is to rake them over the coals, take them out, and then continue this down. Now they could be right, and if they are, good for them. But if they're wrong, they're vulnerable, and so the first of the wrong are going to come out here, and new buying will come up to here and then take out the rest of these FOMO buyers. And then I would expect the people who are still holding from here, which are likely not retail traders. This volume is probably institutional. It's probably hedgers, and it's probably market maker activity. That's where they're going to double down because they're not running a stop. They're actually looking for a good price. And this is a good price. There's a ton of liquidity up here. Their orders are sitting up here waiting to get filled, or they're done and this thing blows through those areas and comes back to the intermediate sandbox, which, excuse me, the intermediate sandbox is right here on this blue. This edge here represented the developing RTH level yesterday, and now it's crossing down below. And so that intermediate sandbox is now just this little sliver. It's come to a point, and it's telling us that that is resolved, and it's resolved to the downside. All of the longs from yesterday are gone. Longs from today have taken over, and they've resolved this level here. This is now a selling level, like a pure selling level. It'll be really hard to get through it. We could, but it's going to be hard to get through it. And now we're into the developing sandbox and trading against that. So that's where those ideas come from. Whether they're right or wrong, I have no idea. But this is the way that I have kind of narrated the whole process, not just today, but pretty much every day for the last 2 years. With some minor changes, but pretty much the same over time. So if we get above here, it puts this on the table. It looks a lot like that swing high, and people come in and they're like, oh yeah, stop pick on the swing high, but actually my belief is that it's a stop pick on this liquidity, the average participants here, and if that's a pick here, it's going to be in alignment with the higher time frame theme that's in play from way back here and really has nothing to do with this swing high. It actually has to do with the liquidity that's packed into these ropes. And if we blow through that, then the next level is right here. If we blow through that, the next level is here. And so a lot of times I think people assign value to swings and to these other levels, but I think it's actually the VWAPs. I think the market is trying to be efficient. I think the algos are trying to like efficiently move this market in the direction that they want it to go. And whether it's a central bank algo or a hedge funds algo or some quant, in his mother's basement's algo, I think they're all looking for efficient price discovery and transaction. And so with that in mind, I really I really lean heavily on these edges and try to identify which way the market's going and then trade the edges in that direction. And that's my whole setup. And I know you've heard this like 100 times, but that's that's really it. That's really it. Like I don't want to take a short for a continuation here. I want to take the short up here in conjunction with the liquidity being grabbed here. And the fact that we didn't go up here and grab this liquidity to me says the market doesn't need it. It's already running efficiently. And so we'll go in and put a new low. Once they distribute that short down here, then the market can go up and grab that liquidity, redistribute it lower, go up and grab the next pop, redistribute it lower. If it doesn't get there, it's because it's already running efficiently. That's kind of um, my overall theme. There's some beautiful trades in here, beautiful. So like if you didn't get this, look at this, bam, bam, rejection of that lower edge. Efficient market doesn't need to go up to the upper edge, sells it off. I mean that's my eyes are fluttering right now. That's beautiful. 14-day back is the next check down at 40. Excuse me. Truly, I don't mean to cough up phlegm balls into the mic. Sellers below 14 put 15 on at 33 and then 16 on at 27, and that's pretty much a full pull uh, mean reversion back to our rope here, and that doesn't mean that's the end of it, but there is a lot of liquidity baked into this level here. Another view of it is baked into this level, and then we can also drop some ropes on the full session time frame, and they're a little bit different than the RTH. So the full session, we want to kind of be aware of the 26th. That's taken into account all of the volume, ETH and RTH. This is the chart I traditionally have used in the past. um, well, what do we got here? Day session, full session. They align now. I swear they were different this morning. 26 and a quarter. Excuse me, and 26 and a quarter. So they're the same. Sorry, false alarm. All right, sounds good, sir. Thanks for hanging out today. Upper rope here gives us this, gives us this, gives us full return here, gives us this. Sellers here give us a return back to here. This gives us a swing low and a 14-day back check proper. And this is just all about trade management now. So if you're short in this position, if my bad, if I'm short in this position, I am looking for this to go back to full mean reversion here. And once we get there, then we can have an interesting scenario. So in the higher time frame, these are irrelevant. That's for a different chart. But in this higher time frame, uh, the potential is to come sell down to this level in the market. So what the market's doing is the price check. It's what you would hear me call the 1, 2, 3. And so we have the one up here, not the 1 day back, but the one. Uh, there's a rope. There's three ropes. There's this rope here, 1. There's this rope here, 2, and there's this rope down here, 3. And so if we go from rope 1 to rope 2, the potential is always to come back to 1. If we go back to 1 and fail to get to 1, break above it and then fail underneath it, the potential sets us up again to come back to 2. So we do 1, 2, 1, or 1, 2, 3. And so we can really see a motoring move down if we start to reject these tighter bands. We can rotate through here. We can see some chop between 27 and 800. If we lose this rope, then it opens the door down to 730s. And from the historical time frame, and say you are a long-term investor, the 1, 2, 3 is a potential add position in that longer term price, uh, at that longer term price check. It is also the potential to fall out of the 3 and return to 4, which is really the big price check in the neighborhood. That used to be the upper edge. There's a lot of volume built in from longs here and shorts here, right at 56.52. So higher time frame price check wise, we have 1 up here, 2 here, 3 here, 4 here. Falling out of 3 puts 4, buyers at 3 puts 2. And so to keep it current, we have 1 gives 2, 2 gives 1, or 2 gives 3. That's it, higher time frame. Pretty tough to activate on that if you're a retail trader. You're not going to be slapping on even a micro and throwing your stop above all-time highs and letting it ride. But it's just nice to have that kind of big picture view. So 14-day back sellers sets up 15, and we have intraday price checks along the way here. So we have price check here, 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 and here. And we can decide how we want to stop this position, or if we want to stop it. Maybe we're just chilling out and drinking Mai Tais on the beach while this thing prints us money. Downside target 16, 17, and I think this is actually 18. It says 1, but I'll change it. And so those are the downside levels that I'm eyeing up here. So potential buyers at 15 stop. So the low of day at 15 puts 14 in a course view. In the more refined intraday view, it's a price ladder here, so potential to here. This sets up a return to here. So 1, 2, 3, just like we talked about in that historic time frame. If we fall out of this, it gives us 4. And with this little intraday level here, but really I look at the main rope. So we left 1 behind here. This is 2. 2 either gives us 1 or 2 gives us 3. Uh, Tapish. I see your messages. Um, if you're still in here, I wish YouTube had a chat notification. Are you still in? You're not seeing the timestamps on the chart down here? You should be able to see them. Tapish, are you still here? The timestamps on the chart, yeah, they're pretty light. I actually have them on in white font, so they should stand out about as much. I could make the font bigger, but then it like screws with my margin prices, and so I don't really want to do that. But absolutely review this. This is a great day, like from all the way from. I mean, I'm right a lot of the time, but I was like really freaking right today, buddy, and like all the way from the beginning of the pre-market uh, analysis, like right down to where we're at now, like it has worked out really well. So a great day. Put together your questions and just go through the stream and absorb what you can, and like really what it takes is watch this level here. This level gives us 4. This might be a trade management opportunity. This also gives us the lower edge. So either we're coming back to here, we're coming up to here. This is a great opportunity to get familiar with like the language that I use. Like what's a DUE, what's a DLE, what's the IUE, what's the ILE. They're just like things that I made to like say things quicker. They aren't they're not standard language at all. And so, um, watch this thing, get familiar with like what I'm doing and how I'm viewing things, and like you can apply all of like everything on this chart right here. You can apply. Like it doesn't take. You can do this on any platform. It might take some work on platforms. You might not be able to toggle them on and off with buttons, but like you can get to this on Thinkorswim, I think, or Swim. But like this is how I build my context every day, and my context is pretty freaking good. Um, like aligning with it with a small account might be hard. Like like especially if you're trying to like 3 tick stop it, it could be really hard. But if you're aligned um, with the higher time frame context, you have a much better shot at getting aligned in that micro context and actually getting something out of the market. And I think oftentimes that's the chief problem is people they don't know. They're guessing. They're like, "Oh, it looks like it's going down." And they're they're like, "Oh yeah, we put in a low a day because of a micro composite low volume node from, you know, 11 months ago." And they're like, "This is the end. We're going to take longs now." And that's not what's happening here. It's really not what's happening. We're 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 short because of the context of today, and we're heading down to the context from 17 days ago. It has nothing to do with the microcomposite or the the composite chart. Um, if you have if you're rocking Sierra charts, Ra, who's in this channel now, and I think he said he was stepping out, but he's in my Discord. Reach out to him. He's actually built VWAP charts very similar to mine. He's he's run into some issues with his computer. The rendering of these things is pretty intense, but you could absolutely build this chart in Sierra charts, and this is where I derive all my context from right here. There's a couple nuances that I would show you, um, but this is it, man. And if you can identify context, if you can learn that part of it, like then apply that to your volume profiles or whatever, however you want to trade. You know, if you want to do like uh, the the Tom B method, like this is going to help you identify like what the actual context of the market is and what the downside potential. And if you look at like um, look at my hindsight channel for today, like I laid out the scenarios of what to expect, and then I responded to it. And I can be completely wrong, but if I'm only taking trades at certain locations, being wrong can be profitable. You know, if you're trying to trade like bullshit trades that are in the middle and you don't really even know where the middle is, that's when you get chewed up and spit out. And so, like these edges are money. This trade right here is money. I'm still in this trade, and I added right here. So I took this trade, I got out right here, and then I added back here. And that's all about understanding context. Yeah, yeah, just maybe help him give him an idea how to set it up, and he can set up his own. I think you do have to do the legwork yourself. Uh, you have to build the charts so you kind of understand how they work because they're a unique beast. I can tell you until I'm blue in the face what I'm doing, but until you like internalize it and fully understand it, you're always going to be like, yeah, but it's, you have 4 million lines on that chart. Obviously, at some point, one of them's going to be right. But when you understand that I'm not concerned with what's in the middle here, all I'm looking at are the edges. So what I'm concerned with is this edge here versus this edge here. And this is like the VPOC of this structure. So I want to take a trade from here to here or from here to here, and then continuation. And the continuation part comes from understanding context, or at least having an idea about context. And so here's another edge, and there's another edge, and there's another edge, and then we have this edge up here. And so I only want to take shorts from these locations here where there's big volume that's in line with the way the market's going. These guys are all sellers in here. So we get up to here, they're going to double down or they're going to get squeezed out. That's the choices. And if they come up to here, they're going to double down or they're going to get squeezed out. And eventually, we're going to get a reversal. And then I'll align with that. But all like looking at bookmap and like all of the price action and absorption and aggressive buying and stop runs, those are all part of the context. So like looking at, absorption is maybe going to tell you about a micro rotation, but it isn't going to tell you about the context. And so if you're just looking at this and saying, well, there's absorption down here, I'm going to take a long. Oh, even if you're looking at this edge, oh, the edge held, I'm going to take a long. You're not like in sync with the market, and you're really not understanding the potential. And so I would even argue there's probably a micro composite VPOC somewhere down in this vicinity. Why? Because like there's 20 days of trade that took place down here. So there's a high volume node down here somewhere that there's a volume profile crew that are like, oh, it's going to the high volume node. I'm saying the low hanging fruit is this edge right here. The first edges where these ropes tighten up. So I will keep banging long or short down to here, but I'm not going to try and hold through this. If it comes down to it, I would try and catch the short on the retest of the edge back down to this edge here. But I think there's a potential this thing gets bought up off of the 2020, the 25, 27, and maybe even here, 34. I mean, we're pretty darn close. But I think the market is all about efficient, being efficient. And so it's going to the place where it's most likely to find the liquidity that it needs to do the business that it needs to transact. And there's a metric shit ton of liquidity down here in the form of sell stops from anyone who's short from this micro or long from this micro composite consolidation down here. And so this market is on a beat to get into that liquidity. They're selling or they're buying back the shorts that they acquired in all of this on the way back to here so that they can dip their ladle in this liquidity pool and then take it back up. And so when you understand the market and what's actually happening in it, you can stop guessing. And that's really the bottom line is there is good shit in here. You can apply this to everything you do already. Um, and you can learn how to identify context in a meaningful way. And I think Ra can tell you, um, especially if he's willing to talk to you, he can tell you about his experience with this. Because I can tell you, this is not straightforward. I've had a dozen people like just like Ra, a dozen people that have been like really into what I'm doing, and I think I've got one other person who's really taken it and ran with it, and I think Ra is well on his way. Um, so he would be my second prodigy. But I think it's just overwhelming. You look at this, you're like, I can't build these charts. There's a lot of lines. It's chaos. It's nothing. It's like nothing I've ever learned. Uh, it's hard to like shift gears. Just like if you scroll up in chat, uh, Dinosaur was saying he's too deep into T-Lab to like apply what he comes back here every day to look at this. He comes back here every day to see what I'm doing, to check with me on context. But he's too deep into T-Lab to actually take the time to learn how to do this. And I think there's a lot of that. It's a different language. It's it can be overwhelming. But I promise you, if you learn even a small amount of what I'm talking about, you can apply that to what you already know and become, if you're already successful, you can become more successful. But it does take some effort because it doesn't come free and it's not easy all the time. So we're seeing this impulse up. This isn't what I wouldn't consider this a long opportunity. I still feel like we're on a beat down to the levels that we identified earlier. The only reason that I would even consider a long on today would be if we came in and man, I would say like developing VWAP. So developing VWAP, maybe these fatties here from the selling, and preferably the 0 day back. And then again, I would still be looking to short down to this lower edge for continuation lower, even if we got that. And when we get a like a reversal setup where I'm starting to think to the long side, we're gonna see this go up in like the most manic way. I mean, it's gonna go up a lot faster than it's coming down. It's gonna be hit the bottom. Sellers are going to be done. The algos are going to be done selling it, and then everyone's going to come in pig pile behind it, and this thing's just going to flow up like there's nobody's business. But when it gets up to these levels, I will look for it to continue down and retest that edge at some point. And so this to me is just they're just short opportunities for continuation back to the lower edge, and then to see if we get that breakdown for a continuation on that higher time frame price ladder. Look at the sellers flow in here. I actually have the heat map on today. I usually just my book map. I hardly even use the heat map, and if I do, it's like super faint because I just want to see the price action. So watch this lower edge. Buyers at this lower edge. Let's set up some rotations. The first rotation that it sets up is to come back to this edge here. So current micro balance battle is in between here. If we break up here, a test of the outside edge up here is not unreasonable. We got the leading edge, but potential to come all the way through and test the upper edge. The seller's below. So let's just say you shorted here. Let's say there's an LVN over here, and you're looking at volume profile and you're like, oh, there's an LVN. I'm going to short that. Look for the rope. Does the rope align? Because this is the actual context of the short. The LVN is incidental to all of this price action out here. The sellers are here. When they double down, it puts this edge on the table. Sellers below here put the potential for the swing. Buyers at this edge put this edge on, and then back to here for a test. So you can look at the alignment of this. Notice I don't even have a profile, not one profile on any chart. None. I don't even look at them. The only time I look at volume profile is in a situation where we don't have VWAPs to look at. Because I value these VWAPs. They're dynamic, they're moving, they're telling us where the average, like, yeah, sure, this is the volume that traded in the structure is like somewhere in here, chop, 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 break high, break low, retest the volume here, but the average position is here. So the fact that we didn't get back to this level and came back to the actual participants' average positions from here, and they doubled down and they're in the money. And so when they double down, I know the average long is baked into here. So if these clowns double down, these bottom pickers double down, then it can come back up to this edge and then come back up to here. So I want to be scaling in front of this before these people double down. And then if they get popped out, we immediately start to squeeze these guys out because they're weak bottom pickers in the wrong context. They have no idea what they're doing and they're about to get wrecked. And so we start feeding on them and we have the potential to blow them out. And some of them got a really good position down here. Somebody bought this and they actually have stops underneath here. And we're going to get stops from here down to here and then a pop that's going to catapult us down to the next level on new late sellers, new FOMO, FOMO selling, FOMO selling, FOMO selling. This is all solid selling up here. These guys are solidly in the money. These guys are solidly in the money. These are late to the party sellers. These are crazy ass bottom picking buyers that are completely out of context. Now, there might be a level down here that they're looking at, but it's not the same level I am. And my reversal is going to look a lot different than this. My reversal is going to look something more akin to this. Because I don't have to be the first one in. I know if we get this move here and a retracement back to that edge and find buyers there, that we're probably done for the day. That's my understanding of the market. We're probably done for the day. If we come up to one of these levels, that doesn't say we're done going down for the day. I want to see buyers step in. I want to see a manic. I want to see buying like this selling. I want to see it come up and just like free flow, bop, 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 and then retrace and see buyers at that edge. Then I'll say, oh, okay, maybe I'll look for longs. And then at that point, the edge is maybe up here somewhere, and now I have upside target, upside target, upside target, upside target. And maybe today I don't take a long. There's that potential too. There's that upper micro edge. Seeing sellers batting it down back below this lower edge. So we have upper edge, lower edge, developing upper edge, developing lower edge, maybe developing lower edge here. But whatever, however you define the edges, they're all edges in their own regard. This is the upper edge from here. This is the lower edge from the RTH session. This is all range expansion on this edge. This is the upper edge from the RTH open and ETH session. This is the intermediate edge here. The, the blue line is the intermediate lower edge. So the intermediate upper edge has now moved below the intermediate lower edge, which is telling me all of the longs from yesterday are gone when that cross happens. They're out of the market, completely out, no longer relevant. What is relevant then? This leg. Sellers baked in here, all the average seller from the intermediate time frame right here. Average seller from the ETH right here. Average seller from RTH right here. If we come up here, find support at that lower edge here, fuel, 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 breakout higher time frame continuation in that historic time frame. If none of that happens, I'm just going to lean long. Just going to keep swinging long until we hit that level where the buyers come in, and we'll know because we'll have that impulse up and that lower edge will hold. So I just keep swinging the bat in that direction. And that's how I define context. That's how I sort it out. So much of this isn't even required right now. I'll just get to there, developing upper edge. And I think just getting to here is probably enough. Something else to consider is like set up these VWAPs or go back and just look at how price came down here, retested that same level, and then failed. And that was my trigger. Like, go back in the stream and listen. If we find sellers below 11-day back, it sets up 12. If we find sellers below 12, I see real weakness and the potential to return to here. And then look at how price behaves in here. It comes down, tests, rejects, retests, tests, rejects, retest, test, reject. Just climbs that price ladder. I don't use these levels as trade management. I use the intraday levels, but the behavior is in this higher time frame. It's test, 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 reject, test, reject, test, test, reject, test. It just tick tock, tick tock, tick tock all the way down to those levels. And look at this absorption now that we have down here. This is interesting. Aggressive sellers trying to push this down for that last leg. They need to get it into this liquidity down here. They need to dip their ladle in that pool. I'll show you the intermediate edges in a second. I'm going to manage this stop here, and then I'll be done for the day actually. And that's a good question. Because those intermediate edges, the intermediate time frame edges are probably the most important thing that you can do uh, to help you identify context. Like literally the 1 day back, yesterday's full session VWAP is my over under for being long or short. I mean, very generically, but that's it. So here we are at 15. Potential is to come back to 14. 14 gives us 13. Sellers at 14 put us 15 back on the table, and that's all happening in this intraday price action. So over on this chart, buyers, oh shit, buyers here set up a return to here, buyers here set up a return to here, buyers here set up a return to here on these ropes for a retest, retest here, retest here. So I can pick a spot to hide behind. Do I want to give back 1 point? 3 points, 5 points, 7 points to find out how deep we go here, I can make an educated guess. Oh, I love that question. Intermediate time frame. That's the intermediate time frame is the money time frame. That's what that is. So look at the buyers and sellers battling it out here. Think about the price checks up. So we got 36, 39, 41 and a half, and 46. And so our move down to our low of day is at 31. 1, 2, 3. Above this is a breakout to here. I can kind of say, well, we're getting pretty close to our target down here. Do I want to give back 6 to get 4? Because that's kind of what it's coming down to. 15 to 16. And then 17 and 18 are kind of a micro composite. And that's the beginning of the tight VWAPs here. So we're getting to our location here. I'm not really willing to give back a whole lot, so I'm really attentive to the price action that's taking place. And as these consolidations start printing and then we break lower, then I just take the swing. So as this one breaks down and makes a new low, or this one makes a new low, then I'll take I'll park above that swing and I'll just keep managing it that way. Because we've almost arrived at my destination. I'm looking at uh, I'm looking at Rod's chart that he just posted in the Trader Lab, and he's got a micro composite plotted down here. So I see the potential for it, but I actually think the volume is deeper. Now I absolutely respect the market retail coming in and buying this micro composite up, and this may full send to the moon. I have no idea, but I think we have lower price checks left. Nothing I see here says reversal. So as soon as we make a low here, then I'll take the stop and drop it down on top of that last poke up. I know there's longs buying that micro composite level here, and they're about to get wrecked if we go down. But I'm going to give it a chance to make the low. The delta check above is 38 and a quarter, and I'm behind that. As soon as as soon as we, and if we make a low, then I'll drop in on this spike here. My stop will be about 36. There we go. So I'm just going to take that stop level, and I'm going to continue to manage this down now. Like we're at our level. I've locked in. Um, well, just on this last lot, I've locked in 20 points. But the dance, I think the dance, I've gotten 40 points out of it. And the other thing is I'm trading micros here, and I could trade full-sized lots if I wanted to, but what I found is I trade more freely when I trade the correct size. And so if I'm trading full-size lots, I struggle with that because it's like literally a mortgage payment or, a week's worth of groceries, and emotionally it's really hard. I think that's where most people are kind of fucked up. I'm up 380 bucks on the day, trading micros, and I've only got uh, a volume of 37 lots. So like just think about that, that's pretty good. That's pretty good numbers. And I certainly could trade more, but I want to just be comfortable. I don't want to be stressed out. So if we make a new low here, there's a delta check at the 15-day back. I'll hide behind that. I'm looking for 16 to come in, so I want to see a flush. Boom! Sellers hit this thing hard, take it down to 16, and then we have liquidity stacked all the way down to 21, 22, down at 52, 58.20. I don't even have days backs on the chart after that. We have there's 185 lots down at 5,800. Those guys might be right. So I'm looking for this stick into 16, and I want to see a power move down to 16, and then I'll close in tight on that last swing. We're well past my expectations here, so I don't have any issue taking this thing off and being done. From a VWAP standpoint, we have current price 1, 2, 3, 35 and a quarter. Could hide behind the 2. That's the micromanage strategy. So somewhere above 32. And if you don't want to give back 32, just hit the close button and be done. Because that's the potential. But I'll just keep leapfrogging down. Like every time we spike up, I'll stay back a couple spikes. I'll watch the delta. So 28 is probably the last safe spot before we put in a new high on the last swing. So if we can stay below 28, I'm in it. Go above 28, I'll be done. If we poke down a new low, I'll drop down and take the 27 and a half. There we go, 27 and a half. And I'll just keep managing this thing down because right now we're seeing some capitulation. There's a lot of liquidity down here. So new low, I'll grab that swing. But I'm willing to give it the delta check at 27 to find out if we're going to make that new low or not. And then there's a delta check at 25 and a quarter now. So punch a new low in, impulse away from that, and then I'll be eyeing up that location. Next safe spot, 26 and a half. If 26 and a half goes, we could be done. pretty hard selling at 24.5 still. Somebody wants this thing to go down. And there's a delta check at 25.25. If that goes, that gives us 27. So now I'm above that swing. And I'll just manage it just like this. I'll just keep leapfrogging it down. Looking at the delta. I want to be on a short. I want to be behind the green delta. On a long, I'm going to be behind the red for trailing. And I'm flat. So that's it. End of trade. And that was a good one. And this is not done by any means, but look at where we're at. So that's my price check. And this is where I expect to see the potential for a rotation up. Whether we get it or not, it's a whole nother story. All right, so are you still here, Tepesh? Yeah, still selling this thing too. Premature ejection. That's all right. That's the FOMO talking. All right, reach over and hit that thumbs up. Give it a like and sub if you haven't. Tepesh, are you here? I'll know you're here because you'll hit that like button, and then we could talk about that intermediate edge. Okay, no problem. I'm gonna take a break, and I'll be back shortly. I gotta give my eyes a rest and walk around a bit. So I'll leave the stream up and running. I'll throw in some levels to watch for here. You probably know them, but I'll do it anyway. Potential to there, there, there. So something like that. All right, I'll be back in a bit. Hey, 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 I'm back. Laundry's done. Cat's out. Uh, Curious where I got short. Um, well, I got short a couple of times. So out of the gate, the original short, the short I took last night was a break back in here and just down to the 1 day back. So from here to here. Oh wait, no, from here to here. It was an ETH. So on the ETH open. No, no, it wasn't. One of the two. Either a break underneath this high here or a rejection of the high. I can't remember. And only back to here. And then this morning pre-market, the rejection of this edge here, short, and then a short off of the 0 day back here, and then a short on the rejection of this, but I didn't actually get short until underneath here, so the rejection here, and then a short here at this edge that I carried down to 16-day back right here and got out 17-day back, which was pretty much my entire thesis for the day. But yeah, against the previous levels in the context of that move down. Answer your question? Got it? Thanks. Yep. So remember we were talking earlier about the LVN longs that people were queuing up for. Uh, this is why, because I really feel like this is the magnet here, and that all of that nonsense is irrelevant. And this is not, this is a return to balance in this time frame. So we rejected this rope up here in favor of this rope down here. And the potential then is to go from here back to here, or to rotate on this side. And then the next downside check would be here. So 730 in the higher time frame. So I'm sure there's a micro composite down here somewhere between here and here. And that's the same one I'm shooting for if we have selling. But it's going to involve getting in that price ladder and clicking down. And so the low side of these VWAPs before they spread out here is somewhere down around 800. So that's the potential lower edge is 800. And then if we go below 800 and reject this upper edge, then I would be looking for this. But this is really coarse and broad. Uh, it You can't day trade this chart, but this can give you an idea of a theme. And same thing on this on this chart here. Return to this balance. This is just a higher time frame the 1 day full session chart. So return to that balance there. But this doesn't look like it's done. Looks like it's still trending down. I set up an event. I don't know how they work, Tepesh. I set an event up in my channel. Sign up for it if it fits your time frame. Otherwise, I'll probably just do it. There just won't be a Q&A. So the lower edge of all of this consolidation is down here where the VWAPs start to stretch out. It might even go down to this one here, but this one is above the psych level of 5,800, um, and they start widening out here, but they really get wide here. That just shows me that we had trending FOMO buyers up, and then this is the full range of the consolidation here. So we're in that uh, we're in that rope, and that rope goes from somewhere either 16 or 17 to 18 days back, probably here, down to here is the meat of it. And so if this market is looking for liquidity, that's where it's going to find it. When it comes to the other side of this, maybe it has enough liquidity to start shaking it out to the upside. And that's something I'll be watching. But for today, this is in full meltdown mode. Yeah, I should have stayed in this thing. Shoulda, woulda, coulda. I had some stuff I had to do anyway. It's only getting worse now. Watch that 5,800 level. That's legit. Uh, 58, 59, 97, and it can keep going. Can just blow right on through and start clicking levels lower. But if we're going to find buyers today, it's probably on the lower edge of this balance, and then the potential is to just rotate in here, which isn't the trade I want to be involved in. I want to be involved in the meltdown, not the taking 5 point swats. Places to get aligned with. This is the last check here. That would be the recheck. This would be acceptance of lower prices here. This would be a retest of this here. But it's pretty weak at this point. This thing is just capitulation station. And we can see like this right now, anyone buying this, anyone accumulating down here, they would be getting hella fills. It's like I don't know what the between 1221 and now, like how many contracts have traded in here, but my guess is this is either higher time frame accumulation or higher time frame distribution, hard distribution in here. They're shaking out their shorts, and if they're going to accumulate, this is the location where they're going to find the most liquidity to get out of shorts and get into longs. And they may not have an interest in longs, so maybe they loaded up enough liquidity up in this consolidation here over the last 8 days to shake it all out and get lower. But if they're looking for fills, this is where they're going to find it. I don't even know what that's from. Doesn't matter. Oh, turn that on. Turn that off. Okay, why is that on? What that? We want this one. Oh my god. Oh, painful. I just turned on a bunch of shit accidentally on the wrong chart. And we got a lock up here. This chart is not live right now, so just a heads up. This chart here is still relevant, higher time frame wise. 5,800 is the downside potential, I think, here. I swear I don't wanna shut this thing down, but I did turn on the wrong volume profile, and it profiled like every bar on the chart, which is always not good. So hopefully it finishes the job and I don't have to shut down, because that would suck. That would suck. I'm gonna have to shut down, I think. That's some bullshit. All right, 58.08 right now. That's 25. 26 down at 04, and 27 down at 1.5, and then 28 down at 97. 28 is kind of the lower edge of the consolidation. So I'm gonna shut this down and see what the damage is. It's not even offering me an opportunity to shut it down. It's so locked up. Oh, there we go. Look at that. Came undone. So I want to turn these off. And I don't know which profile I had on here, but I'm going to delete this. Oh my goodness. Saved by the bell. That's what happens when you have 600 VWAPs on your chart and you try and put a profile that has, I don't know how many days I have on that, probably like 10,000 days. So like it profiled every day for 10,000 days. It's a lot of calculations. Don't misclick. All right, well, right now I'm just a tourist here. Anyone in a position? Anyone? Anyone? Bueller? Oh, nice 12 on the pullback. Let's see where you're at. Ooh, aggressive? It's good though. This little micro pullback here. And I say aggressive, but I think you have to be aggressive in a market like this because if you wait for the price check, it may be a long time coming. Yeah, it's still just a couple points though. Actually, I think bookmap, like depending on how you look at it, uh, it can look really insubstantial. Like if you scrunch it down like this, it doesn't even feel like it's moving. So I usually try in bookmap to like keep my zoom so that I'm seeing every tick, every 25-cent increment, and I try and keep it like that every day so that it's like scales the same way. Some people have like dollar increments or even more. I can't do that. I try and keep it consistent so you don't look at it and go, "Oh, that's a monster move," but it's really not. Coming into that 800 level, um, there's liquidity down there, and there's actually liquidity uh, down below. I don't know if I don't know whose it is, or if we're going to get into it. If it's part of the same algo, somebody expects it to go down even lower. Yeah, 800's like a pretty serious level, a psychological level. I don't see I don't see it like right now. I don't see anything saying reversal. But when this algorithm's done accumulating, that's when you're going to see that big rip up. And just by virtue of like your trade location, you're you're probably, I'm guessing you shorted the 12, but you probably didn't even get filled until the 9. And so like at best that's break even for you. I don't know. I would absolutely give it a shot because the market's melting, and when the market is in a trend like this, it doesn't respect those higher time frame levels. But I would just manage it with a delta profile. You take 1175. Oh, you got in at 1175. Did you get in on a resting? It's pretty crafty work. Yeah, a lot of times I put my orders in Bookmap, and I'll drop them in place, but it depends on the context, If I have a solid level to trade against, like a higher time frame level, I will absolutely um, put a rester in. But on like these for continuation, I probably trade price action. I would actually trade like the breakdown here rather than here. So my entry would have been like on the breakdown of this edge, or maybe this one, or this one here. So in the case of your entry, we broke up. I'll make this bigger so you can see. You broke up, you got short probably on this candle, on the retest, broke down. I'd be looking to get short here, and maybe even over here. Okay, here's your 800. We're seeing buyers come in. This thing is not a reversal. It's not a reversal. They're still selling it. There's 300 sellers at the low, and they may be trapped. Oh, there's a shit ton of sellers. There's 1,000 lots of aggressive selling down here. If this thing doesn't squeeze up, those are just I think we still go lower. But the rotation might come all the way up to here. That's the edge. So 12. Potential to squeeze out all the weak shorts that came into this leg. Sorry about that, but all the way up to here. And above here. Potential to go even further. We got a check here. We got a rope here. And the real outside of the selling is right here. So these are the last like resting buyers or buyers that got into the market. They come from this rope here. So potential to run all the way through those, find sellers and continue lower. Or we could be done. Those buyers are coming all the way from back here, or sellers are coming all the way from back here. But see how we tested that level here? So this is a retest of that level. This is an acceptance of lower prices. And this is a rejection. So any long consideration would have to, for me, would have to come back and take these guys out and tell them, sorry, Charlie, range expand up to here and then hold that lower edge. So I'm a little bit slower these days. There was a time when I would already be long here. It's just not the day. Yeah, that's a good stop location behind this rope here. That's your entry rope. I don't think it's a shitty entry. I just think you have to have reasonable expectations um, based on where you got in. And if that's the case, you kind of saw the writing on the wall at that 800 level. I would have maybe been trailing down like pretty tightly coming into it. But I get fucked all the time too. Like I really like I give back just not having reasonable expectations. This isn't a long for me. It's not really a short either, but it's certainly not a long, even if this edge holds. Kind of talked about the criteria for a long. I feel like a long has to take out up to here. It has to take out all of the sellers from here that were once accepted here and here. Like it has to take them out and then retest the edge. And then I'd think about a long and maybe not today at all. Just because I had such a fantastic morning. Like why wreck a good thing? Yeah, of course he did. I don't mean that in a negative way. I mean, he's very active. He never Tom doesn't give 3 points back to the market. I know he says he does, but he is uh he is a very active trader. Okay, so testing this is a virgin test here. This is a retest here. This is a retest here. This is range expansion to a virgin test up here. So sellers here would put this on. 5 points of range. I'd prefer to actually come up to here to retest, or even here to retest. Now watch that lower edge. That lower edge has to fall here, or this thing can go higher. Uh, I'm not sure which one you're referencing there, but the last one, the very bottom. Oh, well, that's nice. No test on the edge, so potential up to the next rope and all the way up to 19. Drumming up business. What's going on there? It almost looks like setting up a one-on-one coaching biz. Looks like we're going to go up here on this consolidation. Still not long in my book, but definitely a reason to not be short. Watch this upper edge at 19 and then 23. I'm looking for either the retest here of this level, so we checked it, and the retest, or range expansion here. So this is a micro pullback here. This is a micro pullback here, but I want to see range expansion. So I want to see the test here or here, and that's going to give me range to the edge. I mean, you certainly could take it. I just like to make it worth the while. And then with the idea in mind too that this, oh, what's that little skinny thing? This is what I'm looking for as a change of context potential. So if we come up to here, I think of that as a potential change of context, but in the current context, I'm still willing to take a swipe down to that lower edge. If the lower edge holds, then I would consider flipping around and bang it to the long side. Why here? Um, and I'm asking because you're probably wondering that, because this is a virgin level. It hasn't been checked. So we don't know if these guys are still right or still wrong. This one has been checked, and they were right here, and they were right here, but not to here. So this 9 points from here to here, and this is like 15 points. So these widely spaced VWAPs here are FOMO. This comes from the consolidation. These sellers are late to the party sellers, easily squeezed out. So if the market, think about this from the market's perspective, it's looking for liquidity. These guys are probably already out of the market. The mother load of liquidity is here. So if this market is going down, it's going to grab this liquidity, take it to the lower edge. If it's done going down, that lower edge will hold, and we'll go up the next leg. So the first long I'm interested in is any selling we have that comes back to this lower edge after we take this out. And this is a price check in that higher time frame. So like think about what we talked about not too long ago. We could test the lower edge of all of that and then bounce back and forth inside of this consolidation here in these higher time frame VWAPs. Why would we do that? Because the market is going to accumulate a position either for the next leg down or for a return to test those upper edges. So here's our test here. This is the area that I would be stocking a potential short. I want to see a test of this, a breakdown, and then a retest of the micro edge that forms. I can certainly take this on a resting order. But it's risky here. I would consider that on like a 1 day back check or even a developing upper edge. So here I want to see something like this. Breakdown, retest, and then a new low. And we're not getting it, so nothing there. Now we got a proper test here. If sellers come in here, kind of the same thing, looking for a breakdown and a retest. Otherwise, new buyers, and there's a lot of sellers in this market, and they can get squeezed out. So I'm just looking at these levels that have ropes. Here, here. Those are kind of the big ones down here. There's a rope right here that comes off of this edge. Can't see it, but it's right in there somewhere. You could drop a manual on it. You could also drop a manual on this. You could drop a manual on this. That would be the break retrace to. So that'd be the conservative target downside and then over under at the edge. Getting a little chop at this level. And we're back up to that upper edge of this higher time frame rope here. So if this is the bottom, then I would look to swing off of these ropes from here to here to here to here to here to here to here up to here and back higher. Don't know that whether this is the bottom or not. No idea. But this is a kind of impulse that I want to see. We'll know more when we get to that lower edge. Next check up, 31 and a half. This looks pretty nice to the upside. Following a plan sucks sometimes. That's a nice 30-point rip. I hope someone got it. I'm feeling a little jelly. So we're at a level. Next level above. I'm going to turn off some of these VWAPs in here. Actually, not those. Which ones? This one? Yeah, that one. And that one. And that one. That way I can see the ropes in this leg, because those will be the downside targets if there's a short in here. 32 and a half above, or 32 and a quarter above if this gives it up. I want to see it. Kind of the same setup. An impulse down, and then make some room to that upper edge, and then that'd be the short off of that. I don't know. Pretty impulsive leg up. I think the short side may be done. And then we turn into a chop. But if it's not done, oh, not that one. If it's not done, then the potential is to come back down and test this edge and fall out, and so we'll know more then. next check here, and then here. 31. And they're kind of getting hard to see because I've got wider VWAPs here. Let's scrunch them up a little bit. Like this. So 31, 34, and then 40. That's a nice impulse up right there. So definitely willing to buy this lower edge if it finds buyers. So another naked level up here. We retested this one. So if these sellers are right, they should sell this. If they're wrong, they'll run them through and this thing can just keep on going. The ropes that are in here drooping from this leg, these folks are mostly gone. These guys are probably gone. These guys are definitely gone, and these guys are gone with on this push here. So the only thing I got in here, like potentially, is this drop here or this launch here. Got this consolidation here, and that's pretty much it. So and you can't see any of that. It's just too messy. So now this consolidation here, sellers below it sets up a return to this lower edge. Buyers above it sets up a push higher. And the outside edge is right here at 35. So on the downside, these are scoops. I'm just not sure, like, I mean, so they're a price ladder lower, but I'm not sure how relevant they are. I don't feel like there's buyers in here that are going to double down on this stomp. I feel like the edge is down here, and that's kind of where we should go if going anywhere to the south. There's a delta check at 19 on this leg, and there's a fair amount of sellers that came in at 26. So if they're right, we'll go down. If they're wrong, those folks will be grist for the mill, and we'll know soon here. So far, this doesn't look any different than this or this to me. And that can change. I'm open to it. But this consolidation here and this above that edge is concerning for the downside. So we can rotate above and below that. What I'm looking for is a break lower, make some room back up to that edge, and then reject the edge. So it all kind of looks more like this to me. So if I turn off all of the VWAPs except for the current leg, and we look at just that leg for retracement, there isn't a lot of texture here. I mean, it's pretty much just steady buying. All the VWAPs are basically going up. There's no ropes. There's certainly no crosses created. This doesn't. There's not a lick of weakness until here. This is the first weakness we have in all of this buying, and this could be not weakness but strength. But this is contested price action. So my guess is retail is selling the crap out of this, trying to make short work out of some profile element or moving average cross or whatever they're looking at, and there's some there's some buying support here from some other party. So I see the long potential here, wrong location, because there's some short potential here too. So that short is valid all the way up till 0 day back, and it might be counter trend at that point after a big impulse up. Actually gonna try something here. I turn off all those, and I'm gonna go to a bigger bar. See if I can stretch these VWAPs out and get a little better resolution. Well, that gets me up to the developing session, so you can see the ropes a little cleaner with these bigger bars, and the the ropes that are all the same spacing stretch a little further. I'm gonna go with a little bigger bar even, maybe like an 800 tick. The true range of this bar is $1.75. The true range of the 800 is $2. But it just gives me a bigger picture of these upside edges that I was having trouble seeing with the gradiated VWAPs where they're. So those are the ropes. And as if you were long, those would be your upside obstructions, and if you were short, those would be areas of interest. Those are the areas where sellers are either going to get smoked or they're going to double down and take it lower. So if you watch the stream, and I can't imagine why anyone would want to, one of the things that I said earlier is once we hit the buy level, once we find the buyers, we can we can sell this thing down and completely come back and run through all of these intraday levels right back up to that higher time frame upper edge, which is sitting up here, and that could literally happen all today. We've seen it before where we have massive selling right down to a level that the higher time frame players are interested in, and then the market completely reverses that in one day. Look at May 31st of this year. That comes to mind. I think it happened in August too, but I know it happened on May 31st. 7, 3, right here on this candle. Sold it right down. Boom. Finished up here. Closed up here. Same deal right here. 9-6. Sold it down. Oh, sorry. Right here. Sold it down. Closed higher. It went from here to that historic upper edge. So that would be the equivalent of coming all the way down here and then clicking, filling all the way back up. Pretty spectacular move. Both of those, the 31st and this one. And if you scroll back in my channel, I talked about that on both occasions as being a potential level of support. And then about halfway up the move, I was like, this could go all the way. It's just a beautiful, I just like, I love watching the price action unfold, particularly when I'm aligned with it. It's always nice. So anyone that's shorting this up here, and I'm sure there are plenty of people shorting it. In my world, this isn't the kind of price action I want to short. First of all, I hate this. I would prefer to take the short off of a higher time frame level that I can like just expect it to at least get a scale. Like this short here, you don't know if it's breaking one way or the other. You have no idea. Like this is just intermittent. Like after this thing could keep on going. I would buy the retest of this if we came down to it. But if we don't come down to it, these are coming up to price. So price is trading up here and it's dragging all of our VWAPs up. The potential for this short is shrinking every bar that prints up here. 27 and 3/4, now we're less than 10 points down to that edge. So when we came up to this edge, an impulse down and retest right away was a short. This is kind of screwing up that short side idea. First of all, because the range is closing, and secondly, because it's now a coin flip which way it's going to go. Context now is up it based on this leg. It's down based on the day, but we hit that higher time frame level, found buyers. I wanted to see more of a pop and flop, and we've come back and we've expanded range on here. We've come back and tested here. Big impulse. That kind of says maybe there's a long in play here. So even a short, like the outside edge of a short might be the 17 and a half. Now, like I have no idea, but I just like after such a good day, I'd hate to like throw it away trying to take swipes in this kind of shit because this could break up just as easy as it could down. Clearly, someone came into the market here and bought this up. Are they going to rebuy this edge, or is this just short covering and new short accumulation to take this down the next leg? We have no idea. So I don't really have a context for a short anymore off of this, and I would look for more upside. I seriously think I have to add some more spacing of VWAPs that are evenly spaced. This is so nice and so clean. Like it looks so much better than the wide spaced ones. It just doesn't give me enough range. I'd like to get up to the intermediate edge. Like that's kind of my goal. So I can do it with bigger bars, but you lose some of the resolution. Some of your some of your ropes will start to dissolve. And I guess it's fine. You don't really need to see every ripple of the market, but information is power. That gets us up there, but it doesn't get us to the edge. So I have to use a 600 tick Renko or a 600 tick bar. Uh, the squeeze of full session sellers begins right here, and there's a shit ton of volume right up here that traded. So big magnet. That's the 1 day back. This is the intermediate sandbox here. This is all fuel, rocket fuel, but we need buyer participation here. No buyers, no up. It's not going to go up on stops unless someone's buying it. The breakdown here looks interesting. That lower edge sells, takes out the swing, but now our range is 24 to 17, starting to tighten up. And there's absolutely no resolution in here. There's no ropes. There's nothing helpful about this other than the outside edge, which is good because that's the outside target. In this consolidation, these bars are too damn big. In this consolidation, we broke down below, and now we're above the balance in this consolidation. So potential to rotate on both sides of balance, right? Break down. If we put in a high, this would very much look like a long continuation. If sellers come in and we put in another low here, then I would say queue up for the lower edge potentially. Delta check at 26. If 26 holds and we make a new high, then this structure becomes a long structure. Or it has the potential to anyway. If 26 folds up, that's a rejection of the delta check at 29, and it could become a short structure. So got two sides here. Definitely buyers in this picture. My guess is there's an iceberg or something sitting up here, kind of blocking the path. And we're at that time of day, so range expansion and then mean reversion back to developing session, 0 day back. Not unreasonable. Um, if buyers step in here, I don't know if I'm going to get long, lower edge, and if I'm going to get short up here, and I think the clock's kind of running out on that idea, so good time to work on my nail polish. Resistance, potential resistance up here at 33 and 3/4, the outside edge of this drop. Fuel, if we get into these wider space VWAPs here, we'll squeeze up to the 40 level, which is just a hop, skip, and a jump away from developing VWAP. So, an absolutely potential for VWAP to sell this thing down and set up kind of that closing swing trade that Tom B talks about. I just don't know. Like, I don't think those manifest. We hit that 5,800. That's mean reversion. So we talk about the historic time frame and the 123 or the 121. This is in the middle of a V-shaped 121. So carry this forward to tomorrow. What did we do today? Click this level. The trajectory would be mean reversion here, back to the 1 day back, pop the top off of the 1 day back, pop the top off of 2 days back, 3 days back, 4 days back, and then poof, up to the races. That's where the big squeeze starts. But we want to see the edge hold like at all times. So in the overnight, if this edge holds up, this becomes the intermediate edge. This becomes the intermediate upper edge, and there's fuel baked in here. So this will be 2 days back here. So lower edge holds, it puts this edge on. If this edge fails, it puts this one on. Fuel, 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 rocket fuel. And if sellers come in on any of those levels, they block the way. But this is going to be the critical edge to see if it holds or if there's people willing to sell it down below. There's willing sellers that might be telling a tale. I mean, right now in this trajectory, we should go back to the higher time frame one. The higher time frame one is right here in this trajectory. If we don't go back there and we come back to, and we haven't even broken out of the tight spaced VWAPs here. We're still in the rope of, and I'm talking about 18 days, 17, 16, 15, 14, 13. See how there's space in between these two here? We're still in the tightly spaced VWAPs. That's the magnet between here and here. So the low of day and here, that's the magnet. If we can break out of that tractor beam, then it opens the door to return to the one edge up here. And we're going to do that by climbing the price ladder higher. And if we can't do that and come back to here, then it sets up a potential deeper pullback in this higher time frame. Just fractals, the fractals. And we only have to align with two fractals to be profitable. This looks pretty bullish though. All this volume traded, failed, put in a high, stopped the balance. If this balance holds, outside edge here, fails 33, 34, then it puts 39 on. And I swear I'm adding some VWAPs. So I only have 300 VWAPs on this chart. Let me see. Yeah, I think there's 300 on here. Yeah, give or take, there's 300. I'm going to add 300 more. So I'm going to get this up to 1200 VWAPs. And that'll give me solid coverage up to about here with clean. But that's on a 1600 tick, so that changes things. If I go to 400, 400 is kind of my favorite flavor. That would get me all the way up to here with clean. I think I have a every three. These are every other. I think I have one for every three somewhere. But it's the wrong color. It's like purple or blue or something. But this is what I like. I like having small bars so I can see the price action and see the ropes form. I mean, otherwise it's just like a wash of lines. Doesn't show any texture. I can change the bar type too. So this is a $1.50 range. I can go to a $1.50 range chart, but these are ugly. This is just like, I don't want to look at this. So tick bars are really the prettiest bars. Turn these off. And see, I go down to a 300 tick bar and you can actually see the rope here now. You better have it on HD if you want to see it, but you can see the rope there. But this is my whole kit right here. Oh wait, yeah. So that's 300, up to 300 bars. Shows me that lower edge. But 300 bars at $1.25 doesn't go very far. And if we go down to, say, 150 tick, the range of that bar, ooh, it's taking a long time. The range of that bar is $1, and you can see how they don't go very far at all. But you do start to see more resolution. So that's 600 bars now at that edge. But you can see the rope that came up from here, which is the price check, the micro price check. So here, long, scale, 27 to 30, long, scale, target 1, punt. And anyone who was getting short in here is getting just wrecked right now. Got all those people that were saying, calling the short trade, they're boom, they're gone. And then more shorts came in, boom, they're gone. And this thing can just like keep leapfrogging up. And for the most part, the trajectory is to mean revert back to developing VWAP and reset for tomorrow. And at any time, this could be higher time frame players stopless, so maybe we don't squeeze them out and then we just exhaust the buyers and then sell this thing down to the lower edge too. So even if you were long here, like you have to have a reasonable expectation because the potential is always to come back to the south side of this and recheck this rope here. And and it's important to remember that this rope isn't just about this price action here. This rope is everything from here to the right. So all of this is baked into this. If it was just this, it would be flat. So it's dragged up, it's curling up because of the price action here. And you can manual this and see where that rope actually is. So I'll drop the VWAP right here. Oh, look at that. Amazing. So it's just showing what you can see if you manual them. But this is the naked downside check here. We haven't checked that far down. We checked down to this one, but not to here. 39, 42, 44, 49. 39, if 39 falls, 42. So we're looking for buyers to continue pushing this up. Sellers baked into these levels here, potential to squeeze them out and get a pop all the way back to the developing VWAP. Full session VWAP, sellers baked into this edge, potential rotation down. If the sellers don't come in, the squeeze begins here. Buyers above the intermediate upper edge, kick the squeeze off into high gear, squeezing out shorts from the overnight high in yesterday's swing high. So contextually, looks like we found the buyers. Looks like we found the lack of selling is maybe a better way to look at it. It's going to take a retest of this level either in the ETH or into tomorrow to confirm that. So right now it's looking very much like we're on a trajectory to retest the 0-day back and potentially break out and move on up to the 1-day back, and that can happen in the overnight time frame. The buyers have been found, then we should go up. If they haven't been found, we'll come back down and fail at this edge. Still looks pretty solid to the upside. Oh man. Seeing a little bit of selling taking place at this 39. It's the retest of the 0-day back. This is basically the split from the sellers that came in at force at 0-day back. This is the kind of the 50% edge here. that was nice. I think that tells the tale of what this market thinks. Just say no. Next up here, 42, the outside edge of the sellers here. Buyers above 42 uh, give us 44. Buyers above 44 give us 49. Buyers above 49 give us 53. Buyers above 53 give us 57. Buyers above 57 put us at 63, where the squeeze begins in earnest. This is it. Market on close, imbalance here. Uh, Potential to rotate all the way down to this developing lower edge. If this rope fails, it sets up a return to here. So 30 might be the end of the road for the longs. And if you're not holding overnight, trade management is probably in order, because this can do anything here. So I am going to manage this last runner here at 30. I'm going to give it this price check edge and see if I can squeak a full mean reversion out of it. And if not, that one's well above break even. And I've locked in a couple along the way. So feeling pretty good about that. Good on the day overall. Uh, 42 lots traded, and win-loss ratio 55 to 45. 55 wins to 45% losses. Not too bad, and all in all, pretty hard in the green. So I hope you had a good day as well, and I will wrap this up and see you in the morning. So thanks for stopping in.